Muted. Son of a bitch. Well, hey, what's going on, you guys? It is I, Dollar Cost Crypto, here with the Fed meeting breakdown. What is going on, you guys, man? Dude, man, this market has been pumping, man. I hope y'all been DCAing, man, because, man, yikes, man, the market's been real green lately, man. Beautiful, man. But that's right. Franklin St. Hex in the chat, man. Hope smash that like button. Welcome, you guys. Doing an OG episode here, man. I lent the studio out to Access Vegas for Raul Tomasi and Michael Sartain and stuff. So I'm in the old office right now. But let's get it, man. Fallout Zone, Phantom, and OP alone have pumped my back. So, dude, Phantom, chef's kiss, man. I want you to know who didn't give up on Phantom. That was I. I bought those altcoin lows. I bought the lows on every altcoin in the entire Phantom ecosystem. I bought the low. I bought the low on Hex. I bought the low on Phantom. I bought the low on Illuvium. Dude, I bought the low on everything in this market. All of it, bro. Damn. Ray Charles of the game, baby. Sheesh. Shout out to Crypto Boogie with a $5 super check. Catch you in the morning, amigo. Thank you so much, man. And I think I had one more. Conrito, hope you're doing well. DCC, I think there's going to be an Illuvium pullback soon, or we continue to pump. I'll probably answer a little bit of crypto questions at the end, though. But yeah, I think we're going to have a bit of a turn down in a bit. But I'll get into today's main topic, which is going to be mostly about the Federal Reserve and what's kind of going on in the market right now. So, kind of let's get into it. So, a lot of this kind of the whole thing that I do with these kind of streams is kind of to break down this kind of complex sort of issue. The Federal Reserve goes out of their way to really overcomplicate something in order for you guys not to understand it, so they can get over on you, right? And there is a lot of mixed opinions, and even the Fed's kind of like, dang, dudes, we're kind of in a tough pickle right here. And you can even hear it in Jerome Powell's voice. But if you look in the description box below, I do have the link to the actual video and stuff if you want to check it out afterwards and stuff. But yeah, man, let's definitely get into it, you guys, man. I've got a lot of interesting streams coming up, you guys, as well and stuff. I think I have a really cool stream on Monday at 5:30 p.m. Pacific Standard Time. I've got a stream, I think, with Red Pill Thor on Saturday as well. I got streams like crazy. Like, you guys, you don't understand what kind of stuff I got coming up for you. I'm cooking with gasoline, you guys. But now to Jerome Powell. Beautiful, man. Beautiful, beautiful. Now, let me get a 1 in the chat if you can hear Jerome Powell walking to the podium.
Good afternoon and welcome.
Were you guys able to hear that? Beautiful. All right. Let's get going, you guys. I will pause it periodically to explain things, and away we go, you guys. Now let's full screen this, man, and let's.
My colleagues and I understand the hardship that high inflation is causing, and we are strongly committed to bringing inflation back down to our 2% goal. Over the past year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our rapid tightening so far are yet to be felt. Even so, we
Yikes. He says you have not even felt the disaster I'm going to bring upon thee. Dang, dudes. So obviously their goal is to bring down what the CPI and stuff, inflation, down to 2%. And they're still a ways away from that. Obviously, the CPI is basically a lie. It's much higher than that, and it's also not reporting on everything as well. But they've kind of changed of how they do the reporting for the CPI. Obviously, they used to do a 2-year average. Now they're doing a 1-year average, and this is going to start bringing down the CPI quite dramatically down quite faster. So, and essentially, in a way, they've kind of taken half the work out of it. And then now, with the actual increase in rates, slowing down the economy, hurting the stock market, hurting the crypto market, it causes a lot of people in the capital class to really lose a lot in gains, as well as makes it harder for companies to really borrow money. And this causes a lot of people to lose jobs, which then in terms, they can't really buy as much assets or as much commodities or goods. And this causes the inflation to go down because there's more supply of things because people are poorer. So in a way, so what they're really trying to do is they're sacrificing the American people here a bit in order to save the dollar. Now, I kind of get it, and it's just a really messed up sort of situation. Now, they put us in it. Let's not beat around the bush. They kept us at 1% for way too long. I mean, at 0% for way too long. We should not have been. And he actually says it on the. If you go to my last Fed stream, which I'll link it later on in the video and stuff. He said it much earlier on that he's like, yeah, we shouldn't have been like basically zero. Like we shouldn't have been to zero, basically. So obviously there's people in the Fed that were like pretty much not very happy with this whole thing of it being at zero, but it kind of is what it is now. So let's get back to it.
We have more work to do. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all. Today, the FOMC raised our policy interest rate by 25 basis points. We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. In addition, we are continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely.
Yeah, I don't believe that for a second. They're not reducing anything in the balance sheet. If it is, it's like a token amount, you guys. That's a complete lie. They hold so much assets and they hold so many bonds and stuff. Like it just couldn't. There isn't enough buyers. There's not enough buyers to like buy all those asset stuff. Maybe over a very long period of time, 20 years, 25 years, they could offset it and stuff. I mean, Here's a little fun fact. If I remember correctly, don't hold me to this. It was either 2006 or 2013. We paid off the last debt of, I think, the Civil War. Yeah. Uh, Pretty crazy. And there's a lot of stories like that of countries and stuff where like they just got done paying for old wars. So, oof, right? But so what Jerome Powell is basically saying here is that they've increased the interest rate by 25 basis points. And now with this meeting here, he's essentially going to say that they are now looking to do another interest rate hike, and not the one in February. So now, not the one that's going to happen in March. So basically, at the very least, we are going to have an additional two more raises, interest rate raises. So that means our next raise will be May 4th. May 4th, you guys. So if we end up getting the one in March, which is 100%, and then the one in May, because they're pretty much skipping April. That means when the Fed pivot is going to happen, it's going to happen in May. So this is actually very bullish for the markets because the markets are already kind of pumpy already. So it kind of means like Jerome Powell basically is kind of saying here, this is kind of like a little cliff notes here for you guys and stuff. I know it's pretty late, but this basically means like we have a lot of runway to pump, you guys. We got a lot of runway to pump. This is good. I mean, it's good and bad, but these 25 basis point increases are basically bullshit. They're token amounts and stuff. It should have been a 75 and a 50, and it went done. But what they're kind of dealing with right now is they're kind of afraid to like over tighten and stuff like that and kind of cause calamity in the market because they're trying to create something called the soft landing, which is like they slow it down. The stock market doesn't completely nuke anymore, neither the crypto market, the real estate market, and the inflation goes down. So they're trying to like lower everything simultaneously and carefully. But honestly, at some point, there's going to be a straw that breaks the camel's back and stuff like that, and it's coming. I've always said that 5.5% rate is kind of crazy. I think right now we're at 4.5. So over these next two rate hike increases, I think that puts us at either 5 or 5.25. 5.5% for the federal fund rate starts bankrupting municipalities across the United States and a lot of other kind of like I would call it zombie corporations and stuff, just because how much more expensive debt becomes, and you start having real problems and stuff. Obviously, with stuff like what Elon Musk did with Twitter and stuff, laying off the entire workforce. That's more of a meme. He was just trying to get rid of the liberals there. But we've had 11,000 job cuts in Facebook and Amazon and all these other companies. But if you actually look at the numbers, they hired far more people than they fired. So if you look across maybe like 2020 to 2021, I'm sorry, forgive me. 2021 to 2022, they hired a lot of people, and now they're kind of taking that down. So like we are losing jobs, but they still, if you look over the past maybe like pre Android 19 years, 2020 to like nowish, there still was more jobs added to the economy regardless. But yeah, let's keep going.
They require maintaining a restrictive stance for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 1%. Recent indicators point to modest growth of spending and production this quarter. Consumer spending appears to be expanding at a subdued pace, in part reflecting tighter financial conditions over the past year. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. Job gains have been robust, with employment rising by an average of 247,000 jobs per month over the last 3 months. Although the pace of job gains has slowed over the course of the past year and nominal wage growth has shown some signs of easing, the labor market continues to be out of balance. Labor demand substantially exceeds the supply of available workers, and the labor force participation rate has changed little from a year ago. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in December, Total PCE prices rose 5.0%. Excluding the volatile food and energy categories, core PCE prices rose 4.4%. The inflation data received over the past 3 months show a welcome reduction in the monthly pace of increases. And while recent developments are encouraging,
Man, someone can't hold the camera together, man. There's someone shaking in their boots right now. But if you kind of hear what he's saying right now, he's saying like good, like okay, yeah, we slowed the U.S. economy down to 1% GDP growth year on year. Good, past inflation and stuff like that. So it means like inflation gains and all that stuff. Then from there, but we're like it's like the stock market basically saying the equities are down, stock market's down. People are having a little harder time getting loans for small businesses, and he's like, yay! And then, but God dang it, there's still a ton of jobs out here. So basically saying like there's such a need for jobs that the labor market is very strong. That basically, if you're looking for a job, it may not be the job you want, but you can get a job. And they seem to be not very happy about this. So this is one thing that's kind of like, oh man, damn, this kind of sucks right here. Is like we kind of want more people, like it harder for people to get jobs, and I mean, basically they're trying to cause more unemployment. You guys, I mean, that's basically not to beat around the bush and stuff. That's kind of what's going on. They want to destroy jobs. This is something me and Swerve the Dip were kind of joking around about. Kind of saying that like he wants 500,000 of Americans just on their ass. But Americans losing jobs basically means they can't spend, so this lowers the inflation down. So remember what I said about taxation. The federal government doesn't need to tax you. They print the money. Well, let me say it again. The federal government does not need to tax you. They print the money. The reason they tax you is because they spent the money already, and they don't want to cause double spend. So what they do is they steal your money by taxing you in order for them to get away from all the money that they printed from the economy. This is a fact. I'm not talking about state governments. States are different. That's different. They don't have the ability to print money. But the federal government does not need to tax you. It's because they can print the money. Anything they want, they can print. All this bullshit about oh my god, oh my god, are we going to raise the debt ceiling? What debt ceiling? Like, bro, they just go, yeah, okay. They're going to filibuster, like try to no. They're going to be arguing from the Republican to Democrat, and then at the end of the night, sign the fucking document. And they raise it. Basically, what raising the debt ceiling is because these fuckers haven't been able to have a balanced balance sheet for the United States government, so they keep just owing more and more money from that agreed one, but so they just keep increasing how much they can go over it by printing. It's, it's just sad. Now, I do feel like Jerome all right, now this is kind of I also feel like Jerome is kind of not very happy with all this shit. Like, I personally don't think he's like, oh my God, I want to destroy all these jobs. I want these people on their asses. But basically, he's in a tough position, right? He didn't cause this. It was previous people. Obviously it was kind of Ben Bernanke that got, well, I mean, if you really go back to it, I would say it's probably Alan Greenspan. Alan Greenspan really is the one that got us into this. He pretty much took the rates down from Paul Volcker from the 70s. Shout out to Rolo here, but that pretty much got, Carter made him into a one-term president because Volcker pretty much smashed the interest rates to 17%. So imagine Jerome Powell is right here, right now. Americans, so imagine, all right, he just said that they increased the rates by 25 basis points. Let me put some on you right here. It is me, Jerome Powell's decision today, and the rest of the board of the Federal Reserve to announce to you today, of the American people, that we are increasing the federal's fund rate by 1,000 basis points. That'd be 10%, you guys. So whatever imagine that Jerome Powell right now said, I'm going to increase the federal's fund rate by 1,000 basis points in one shot. Boom! That would fucking implode. Oh my God, bros. Oh my God. Like that would be like, oh my Lord God. Like, dude, that right there would 100% lead us to like $9,000 Bitcoin. Fuck 11K, bro. Forget 11K, dudes. We'd go to 9K, 7K BTC. We would have a 50% to 60% correction in the equities market within a week of that happening. That's why Jimmy Carter was just a one-term president, you guys. Afterwards, you had drill. Shout out to my boy Reagan. Reagan take over, and then you had Alan Greenspan take over. And what Alan Greenspan did is basically over the next pretty much 30 years, take the rate down from 17. I forget if it was 21 or 17% for the federal fund rate, and basically take it to zero. And for a long time during, like, I would say the 90s and stuff, we were pretty much at a 5 to 7% inflation. The Fed's fund rate, and then into the early 2000s, out of the what do we call it? Yeah, let's call it the tech boom. The tech boom collapse. He pretty much took us to zero, got us out of it, and then the problem is that he left it at zero for too long. And a lot of people have, even like he admitted it, like, yeah, I sent it along too much. But basically, that's what led to the housing boom. And what they did from there, right, is dramatically increase rates from there, and because the market got way overheated, and then they brought in another chairman of the Fed and stuff like that, which is Ben Bernanke. And then Ben Bernanke pretty much took us back to zero and caused QE. And now this is where it gets a little like weird, right? This is our amazing leaders, right? That's correct. Our amazing leaders. This is a big story. This is basically a story that starts in 1970 and has led right now to 2023. 53 years of a story, basically, you guys. Maybe 45, but depending on how you count. But we're talking about a 50 to 40-year storyline here that's going on right now. Crazy, right? And this is kind of what the decisions of our forefathers is causing, problems today, right? So quite interesting. Now, Ben Bernanke, what he studied. Now, this is the two previous chairmen before this one. Ben Bernanke, basically, what he was really famous for, he studied the Great Depression. He had a bunch of these essentially research papers he did on the Great Depression, and basically did reports on like why it happened and how we could have prevented it and stuff like that. And he got prizes for these papers, and even won very recently actually on these papers. Now, it's very likely that if they didn't do what like Ben Bernanke did, and just now some people would have been very happy, let the banks fail, let all this stuff could have go to shit. We would have probably gone into a loss instead of having 2009 to now happen in the equities market and in the world market and in your life. We would have been into depression, 100% depression. It would have been the second Great Depression. 1,000% that would have happened. And we would have, in our standard of living here in the States and across the entire world, would have been significantly worser. And some people were like, yeah, it should have happened. But that's easy to say. Now, I feel like they went a little overboard. But at the same time, I've thought about this and stuff. If we allowed that to happen, imagine how much less people would have born. Maybe your little sister, your little brother wouldn't have been born. How much of a hardship would have happened? What kind of jobs we would have been doing? Like how terrible things would be. It would obviously be in the States. It wouldn't have been as bad as in other countries, but there would have been mass starvations across the world. There would have been. I'm telling you, this would have been very bad worldwide. I'm talking about civilization damn near collapse in a lot of countries. I think the United States would have pulled through a couple, and maybe some of the EU countries as well. But we would have had a lot of people die, a lot of people not be born, and a possibility of a lot of wars. Because the fastest way to get out of a depression is basically start killing people. So I don't praise Ben Bernanke for and the Fed for what they did in basically getting us out of the housing crisis, but it has, through like eating this forbidden fruit, has led to some knowledge and kind of powers and some positive things. Um, yeah, it's yeah. I don't mean to, I don't mean to like to like yeah, I don't mean to like kind of do this whole thing on that stuff, but it is something that is just kind of a food for thought to really just think about that for a second. About that, they did really help out. Now, where I think where Ben Bernanke kind of fucked up is that what they should have done is like around 2016 started increasing the rates, or just slowly over time. These rates should have not have been at zero for so long, right? But it just kind of is what it is now. And now Jerome Powell is kind of trying to fix this thing, and then he's essentially being more of a grown up in the situation, but at the same time, he's also trying to cause calamity in the markets and stuff, and causing job loss, and overall lowering your ability to borrow money, basically, which is how you create money, as well as job creation. And this is, in a way, it is somewhat stifling innovation a little bit, but at the same time, with the calamity of like 2000, of the 2006-7 housing boom, you had the creation of BTC and Bitcoin, because so many people got so tired of this shit. Imagine if they did let it collapse, we probably would have gotten new banks and stuff. We probably wouldn't have had Bitcoin, really, because everything would have got so bad. But because they saw like, oh, they're not letting these banks fail, this is bullshit. This caused a revolution that caused the creation of Bitcoin and created this entire cryptocurrency space that we have today. So, I mean, you're not wrong. Like, scared people drove us to this point, of course. No, definitely, absolutely, definitely. Like, I'm not disagreeing with you in this point. It's just a little food for thought. Just it's a nice, just kind of to kind of hear the background a little bit.
We will energy categories. Core PCE prices rose 4.4%. The inflation data received over the past 3 months show a welcome reduction in the monthly pace of increases. And while recent developments are encouraging, we will need substantially more evidence to be confident that inflation is on a sustained downward path.
Sorry, this comment was too good to fail. If we fail, the world is fooled. That's correct. Fooled. If the United look, we already have a one world currency. It's a dollar. Fuck what you heard. Nobody trusts anybody else. Like, do you trust the Russians? No. Do you trust the Chinese? No. Do you trust? Who the hell do you trust? The Swiss? They got holes in their cheese. I mean, come on. What are you talking about? If the United States dollar, no, regardless or not, I know it's a depreciating asset. Over time, the dollar does go down, but it has afforded us a better world, regardless of no matter what has happened in the, like, under the American empire. I'm an American, right? But under the American dollar and the American empire, this is the safest and the best world that we've had ever, at least from what we know. Maybe an asteroid impact happened a long time ago, and maybe there was a better civilization at that point. But you know what I'm saying? Yeah, that's economy is a slavery. Yeah, I mean, yeah. Trust and code, man. This is kind of why, like, this whole kind of big storyline of just like why we want to go in cryptocurrency so much, because now, because all this stuff and fuckery that's been going on in the system, we now are trying to create a better system. It's not a perfect system. It's not a perfect system, but it's our system and it's our Ponzi. And I mean, I've gone over it. I mean, this is one of the biggest red pills truths. The red pill of finance truth right here is like everything's a Ponzi. And once you get over it, once you accept it and get over that fact and stuff like that, you really start rising above.
Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that's not grounds for complacency. Although inflation has moderated recently, it remains too high. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We are highly attentive to the risks that inflation poses to both sides of our mandate, and we are strongly committed to returning inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by 25 basis points, bringing the target range to 4.5% to 4.75%. And we are continuing the process of significantly reducing the size of our balance sheet. With today's action, we have raised interest rates by 4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy, particularly housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 25 basis points today, continuing the step down from last year's rapid pace of increases. Shifting to a slower pace will better allow the committee to assess the economy's progress toward our goals as we determine the extent of future increases that will be required to attain a sufficiently restrictive stance.
Now, okay, now I want to disagree there. Now, I think it would have been better just to have the higher increases, and they're trying to balance a soft landing, which is best of both worlds a little bit. But what the one problem they could have, okay, this is something. If you guys haven't seen it already, I did another video where I really go through the basics of this. It's on my channel. You'll see Jerome Powell's face on there, and what the Federal Reserve is really scared of, and most countries around the world are really scared of, is something called entrenched inflation, which means that everyone's just, there's just always, it's sort of like, I don't know, no, this is very dorky. This is very dorky here, so please give me some rope here, okay? Now, in 40K, there's something called the boys, the goblins, right? And in the boys, the goblins, they are a species of orc-looking goblins that are made of essentially mushrooms, and these things are so stupid that whatever they believe, it happens. So if enough of these dum-dums believe, if enough of these dum-dums believe that inflation is just normal, then it is. And that's kind of how it is with the consumer and the overall population of the states and in most of the world. Well, the dollar's worth this. People will then act like it more blatantly with it, and then it does become that. So that's the psychological version of it. Then there's the actual factual version of it, where there actually is quite a real amount of inflation, and we kind of have a little bit of both. The boys, baby, the orcs. That's right, Josie. But that's kind of what we're dealing with. That what they're afraid of is most Americans' financial education and literacy is fucking trash. Basura. Damn near non-existent. I mean, the peak of people's education in finance is basically how to balance a checkbook. And I opened a credit card in college to get a fucking free Frisbee. And like student loans are free. That's the peaks, you guys. Hit the like button, baby. Subscribe, hit the notification bell, share this out and stuff. Save your people from plebness. Now, what they're really afraid is an entrenched inflation. So, and this is really scary. Once entrenched inflation gets into an economy, it is fucking so difficult to get it out, and it really keeps them up at night, because effectually what it does to them is kind of it steals power away from the Federal Reserve, and they kind of lose power over the dollar. So they're trying to get a 2%. So in the economy, because there's so much debt, and the way you create money is through debt, either printing it. There's really two ways to really create money: printing it out of thin air, like the Fed does, or loaning money. And we all know our banks are fractional reserve, right? So you deposit $100, they can lend out like damn near $900, right? More or less. And the most money that's printed, it's printed out of local banks, credit unions, Bank of America, JP Morgan. And when they loan a business money or a personal loan and stuff like that, they're just essentially on a computer, just putting zeros on there, and then you're credited, and now you have money. That's how money's created. That's the two main ways money's created: printing it from the Fed, directly from the Treasury. Like the Fed says, we can print this, and then the Treasury says, brrr, and they print physical dollars, or it's zeros in the computer. Shout out Bitcoin, baby. But zeros in the computer from banks creating money by lending money. Now, when this the reason that they want inflation is because over time, a 2% inflation rate over a long period of time, over 30, 40 years, it essentially basically it incentivizes you to borrow money today because you know your dollar is going to be worth less. Not worthless, but worth less in the future. So it causes humans in the psychology of humans to go out into the economy and go spend money. Fuck it, I'll go get a car. They go spend money. I'll go build a house. I'll go take a loan on a business. But when you have deflation, where every year your money's being worth more. Now this is kind of like outside of crypto. This is good and bad. It's good for assets, but I don't know for spending currency. We can maybe we got a debate about that some other time, but it causes people to not want to spend as much money and just kind of sit on capital. So you end up having less investment in the economy, and you have less investment in the things that make an economy really good, which is investing back into people and taking risks and chances. So there is sort of somewhat of a need for inflation, but having an entrenched inflation, let's just say if everyone around the world knew, like, oh yeah, the US dollar inflates 10% a year, fuck. Over time, that's too much inflation, too soon, and it causes a lot of problems where you could get a spiral out effect. And you can look at countries like Turkey or what's the Latin American one? Oh my god, Argentina, the Nazis. Yeah, Argentina, and they've always had this problem with printing currency and stuff like that. So the boogeyman that keeps the Federal Reserve up at night is entrenched inflation. So, but here's the problem: is they're also trying to balance the whole economy as well, right? So, I would say they're better off scaring and crashing the equities market because fuck, we're already here, right? They're better off doing that, but lowering just rip the fucking Band-Aid out. Let's go. Let's buy these fucking cheap ass coins. Let's get the summer pump, and I'll tell you guys what I believe what's going to happen so far. I mean, obviously, if we get one more, like the Fed could maybe increase it one more. Maybe we have one in June or July, right? But so far, it looks like the Fed pivot is now been moved. The goalpost has been moved to May 4th. They need to put America's such a zoo. You should look at Europe. Ooh, you should look at Canada. Yo, shout out to Canada. British Columbia just legalized. What are they legal? I mean, let me pull up my Instagram real quick. My God, bros, if you saw this on my Instagram, like, go to my Instagram right now. It's in the description box below, man. On my Instagram, if you look at my stories, Canada legalizes hard drugs like heroin, fentanyl, cocaine in British Columbia. Bruh. Man. Dudes. But on with the show, you guys.
Committee to assess the economy's progress toward our goals as we determine the extent of future increases that will be required to attain a sufficiently restrictive stance. We will continue to make our decisions meeting by meeting, taking into account the totality of incoming data and their implications for the outlook for economic activity and inflation. We have been taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Now, before I get into the questions, that was like one of the shortest meetings. That was like, yep, we're wrecking the economy, you guys, but slowly and for longer. Now, let me answer a couple super chats, and then we'll get into the questions they have here. There's actually a lot of really great questions that were asked. Some were kind of asked, but some of them were very good. All right, looks for danger of a $2 super chat. Is entrenched inflation what happened in Venezuela? Somewhat. Yeah, you did have it psychologically, right? But the danger of it is eventually everyone's like, oh, this stuff keeps inflating so much that they lose faith in it, and they don't no longer want to store their value in that currency. Like right now, like no matter what people say in crypto, whatever, people do believe in the dollar because they hold a large portion. They hold a large portion of their savings. So anytime they take profits on Bitcoin and Ethereum, whether they hold it in the US dollar and stuff. So people still have faith in the US dollar more than any other currency. But over time, if you just kept it there and didn't work it, you're going to lose a lot of value. Now, what happened with Venezuela is basically they lost the ability to really export. And they really lost a lot of people who would buy their crude, as well as because of kind of some of the beef they had between Venezuela and the United States. The United States kind of cut them off in terms of processing plants in order to turn their sour, heavy crude into basic gasoline, right? And then you also have the competition of fracking, which creates light, sweet crude. Which takes very little processing to happen. So effectively, you had a lot of the manufacturing base in order to process crude oil kind of disappear because you had a lot of the main refineries you had here in the bottom of the state and stuff near the Gulf of Mexico. Essentially, just switch over to the stuff we can pull easily from Texas crude and stuff like that from fracking into that basically. So that's partly what happened there. So. Then from there, so the here's kind of the thing with the dollar. There's I wouldn't say infinite demand, but there is unbelievable amount of demand for the dollar. Now, because the dollar is the world reserve currency, essentially every other currency has to kind of keep up and try to do valuable things for us to exchange our dollars into their country. This is why the United States dollar, the United States usually has a trade deficit with a lot of countries because we're importing things with them. And what happened is with Venezuela, once Venezuela, their main thing they were exporting was oil. As soon as the oil got kind of cut off, the government at a certain point was printing a certain amount of money and relying on certain things and had certain amount of social things in Venezuela in order to keep the general public very docile and give them. And it was basically was spending a lot on their people and stuff, and kind of promising, social care and a bunch of things like that, which isn't terrible, but it just got a little overblown. And then once they lost the money from oil to get dollars, they started printing a lot of their currency, and then their currency devalued significantly because they met and overmet the demand of Venezuelan currency within the country. And then people in other countries also didn't need that much of that currency since they weren't really trading any other major commodities in that country. And then what ended up happening is that hyperinflation started happening. So pretty much that's what happened. Pretty much nobody wants the currency and they didn't have anything to trade dollars with, so the currency started hyperinflating. So this is the main power of the dollar, is the dollar kind of keeps all the other currencies on a treadmill. Like come on, run, come on, motherfuckers, come on. And a lot of other countries get mad at that. Now, I'll also say the same thing happened to Canada. Canada also produces a lot of oil as well, mostly from tar sands. And the United States isn't really buying too much oil from them right now, and they're also having trouble transporting some of that crude oil for the refineries and for the selling of oil to the United States. So because of the loss of revenue, you actually had a big weakness in the Canadian dollar. Now, the Canadians are the number, I think the third or fourth biggest trading partner of the United States, Mexico being the biggest. I think it's like, if I remember correctly, it's Mexico, China, Canada, if I got that correctly. So obviously you're not going to get a complete dying of the Canadian dollar, but because of they lost a lot of the revenue from oil, and so oil is a huge one. That's why the United States controls that pretty heavily. Now, that's why like it is a very dangerous thing when Saudi Arabia tries to take that away, because the United States eagle, and a lot of pictures, man, they have arrows in those talons of theirs, man, and freedom can come to a nation near you. Now, let me answer one more super chat. Well, hey, Miguel, can you explain exactly how they're changing the way they calculate inflation rate will be calculated? Yeah, of course. So basically what's going on is instead of taking a 2-year average, they're doing a 1-year average. So that means is if you, let's just say you track what was the price of eggs 2 years ago versus now. Obviously with inflation, right, we have a certain amount of inflation every year. Because of the inflation rate, and then on top of that, maybe things that happened this year to supply issue, it looks very dramatic. So it makes it look like, holy shit, it really went up a lot. Versus if they only did 1 year, it's the set point is for that year, and then whatever it increases. So it significantly dampens the amount of inflation it shows, because it's not tracking the inflation from 2 years. Because obviously from 2 years ago, things were much cheaper, and then compared to today, that's what happens. So by changing it from a 2 to 1, it makes it look like we're inflating way less than we actually are comparatively to how from 2 years ago. That's how it works. And apparently, yo, Illuvium ripping, man. I hope you guys bought it when I was telling people to buy it at $39, man. That was a good DCA. I did $39. I think the low is $38. Not bad. Not bad. I think it'll probably hit 100 and some change and then come down. Probably we might be able to touch it in the 80s, maybe 70s. It just depends when we from when me and Charlie kind of looked so far, it kind of looks like we're just ripping until like Valentine's Day, basically, before we get another kind of an okayish sort of pullback and stuff. Just to give you a little crypto knowledge in there. But let's keep going. Okay. Yo, what's going on, Jordy Jones? I live in Belgium. Our country is such a mess that we have the biggest taxes and the biggest debt. Dang. Yeah. But it's all countries, man. It's all a bunch of dirty shirts, man. It just is what it is. Let's see. How are the BRICS currency backed by Saudi going to affect the U.S. in crypto? If they end up really passing it and stuff like that, we'll have to see. But then they would have to get. I mean, right now with how bad the Ukrainian war is going for the Russians, and how much trouble the Chinese are having and stuff, it's gonna be pretty weak against the dollar, I would imagine. But it's just mostly what that's if that ends up happening, it's mostly to get around sanctions and stuff in order for them to really just get back to the market. But regardless or not, their markets are pretty torn up and stuff like that. And I wouldn't be surprised if the Saudis actually did this. Now I'm not, knock on wood, I hope it doesn't happen. But if it did happen, I think freedom would come to a lot of Middle Eastern countries, or maybe the United States just pulls out their armies out of there and just hey, we'll see what happens. And the U.S. military is one of the people basically keeping everyone from killing. You believe it or not, this is kind of crazy right here. Like, I mean, everyone hates each other, right? And like the United States is basically the asshole that keeps everyone from the other assholes from killing each other. So all you got to take is the asshole, let them go home, and then the other assholes go kill each other. I know it's very simplistic, but that's the easiest way to understand it, basically. Now, I'm not judging either right or wrong on either side and stuff. They're like, some people are better than others. Maybe other people did this, people did this, and I'm not even judging that. I'm just judging straight off of like these. If you just left them alone, if the United States wasn't there with guns to stop everybody from fucking killing. Now, I'm not saying that the United States doesn't go in there with guns to do dumb shit, right? Obviously, like you always have whatever the country's in control, they always do like fuck shit, right? But outside of that, if you took the United States out of there and just let everything be free, you have a very crazy shifting of power. Maybe the Turks take over. Maybe the Saudis just end up pulling mercenary armies and just mollywop, and maybe Iran goes bananas. Maybe I forgot the ones in Jerusalem and stuff. I know there's 2 countries there, but I'm just talking about, dude. It's gonna be bad. I'm just, it's no bueno, you guys, and that's not good for business. In order to transit oil, all you need is one. All you need is like one person to close up the Strait of Hormuz, and you ain't getting oil out of the Middle East. And then from there, what is then their money and power and status worth at that point? If they can't move around money, so yeah. I really don't hope that, because there's a lot of people living in the area, and I just, for me, dude, I just want people to live a nice life, and I don't want people to deal with this shit. I mean, if people just want to like shit in, like, I understand sports a little bit more now. Like, if people need to release some of those animal energies and stuff, and if watching a bunch of skinny dudes kick like a little soccer ball around makes everyone feel better about themselves, and just, hey, more power to you. Instead of bullets, ripping through people, I'd rather everyone play skinny soccer and stuff than war. So just my opinion. I really believe in human life, and I believe everyone, if it's possible, should have kids, have a loving wife, and raise good children and stuff. And then I think we can really change this whole world and turn this whole thing around. I think that's one of the most beautifulest things on this planet. And if some people choose not to have kids, that's okay. But I think for most people, psychologically, I think just having a group of people that are related to you, that love you, that understand you, and have to love you for the most part, I think is really good for a lot of people's brains and chemistry, just because it kind of gives you something to do and something to kind of work towards. But, I'm crazy, so just is what it is.
Chris Rugaber, the Associated Press. Thank you for doing this. As you know, financial conditions have loosened since the fall, with bond yields falling, which has also brought down mortgage rates, and the stock market posted a solid gain in January. Does that make your job of combating inflation harder? And could you see lifting rates higher than you otherwise would to offset the increase to offset the easing of financial conditions?
Now, what they're talking about right here is basically the federal fund rate is more or less the benchmark for where they like people charge for money, but you also get what people charge for interest rate for. You kind of have a thing between bonds and the actual Fed interest rate. Sometimes you have a dislocation, and sometimes they look at a lot of times they use like short-term bonds and stuff in order to look at like what they should charge for lending people on a 30-year fixed mortgage. This is why bond markets are very important and stuff like that. They sometimes use that. So what they're saying here is that because of the increasing rates, you've actually had some weird shit where like some of these bonds are way cheaper than the actual federal fund rate, and it's actually made it. You actually had in some places, it's cheaper. It's getting a little cheaper to actually be able to borrow on a mortgage. But I think later, I don't know if he says it here or later, but then he eventually says that later on, this is only temporary, because as we keep increasing it higher and higher, these bonds get kind of mispriced and stuff like that, and then eventually you will have a kind of correction. So if there's sometimes temporary mispricings in the market, eventually over time, as the rates go higher and they stay there for a longer time, you get corrections in the market. So he's saying like what you're kind of saying is like, we're kind of having a lagging out of the real estate market. Mortgages should even be more expensive to get a mortgage. So dang.
So it is important that overall financial conditions continue to reflect the policy restraint that we're putting in place in order to bring inflation down to 2%. And of course, financial conditions have tightened very significantly over the past year. I would say that our focus is not on short-term moves, but on sustained changes to broader financial conditions. And it is our judgment that we're not yet at a sufficiently restrictive policy stance, which is why we say that we expect ongoing hikes will be appropriate. Of course, many things affect financial conditions, not just our policy. And we will take into account overall financial conditions along with many other factors as we set policy.
Hi, Chair Powell. Thank you for taking our questions. Rachel Siegel from the Washington Post. Over the last quarter, we've seen a deceleration in prices, in wages, and a fall in consumer spending, all while the unemployment rate has been able to stay at a historic low. Does this at all change your view of how much the unemployment rate would need to go up if at all, to see inflation come down to the levels you're looking for?
So I would say it is a good thing that the disinflation that we
So anytime you hear Washington Post, just think this is Jeff Bezos. That's Amazon talking. Freaking funny.
Today at a historic low. Does this at all change? Taking our questions. Rachel Siegel from the Washington Post. Over the last quarter, we've seen a deceleration in prices, in wages, and a fall in consumer spending, all while the unemployment rate has been able to stay at a historic low. Does this at all change your view of how much the unemployment rate would need to go up, if at all, to see inflation come down to the levels you're looking for?
So I would say it is a good thing that the disinflation that we have seen so far has not come at the expense of a weaker labor market. But I would also say that disinflationary process that you now see underway is really at an early stage. What you see is really in the goods sector, you see inflation now coming down because supply chains have been fixed. Demand is shifting back to services, and shortages have been abated. So you see that in the housing services sector. We expect inflation to continue moving up for a while, but then to come down, assuming that new leases continue to be lower. So,
Woo, I hope you guys peeped that, what he just said right there. That was so fucking important. He just said, I know things look like they're still higher right now and everything like that, but they're heading down. We want more pain in the market. And what I've been saying about real estate, he's basically saying, like, yeah, right now things are still like okay-ish in the real estate market, but they're going to head dramatically down as new leases and things come up. Damn. Re-listen to that with that context, you guys, of like, yo, you guys, like, the market's going to head way lower. Trust.
to services and some goods sector, you see has not come at the expense of a weaker labor market. But I would also say that disinflationary process that you now see underway is really at an early stage. What you see is really
Early stage.
in the goods sector, you see inflation now coming down because supply chains have been fixed. Demand is shifting back to services, and shortages have been abated. So you see that in the housing services sector. We expect inflation to continue moving up
Sheesh.
for a while, but then to come down, assuming that new leases continue to be lower. So in those two sectors, you've got a good story.
So what he could be talking about here, possibly on inflation going up, it could be the reshuffling of boomers moving into warmer states and stuff like this. Is why Florida hasn't really had much of a crash, but that's more of a demographic shift where so you're going to have a lot of other markets. I would say the West Coast to the Midwest. Shit, I mean, basically anywhere where it's really cold, RIP, and good parts of, like, I'd say the West Coast are going to be selling off properties as they're trying to get the retirement money. And a lot of people, if I remember correctly, it was something like 18% of retirees were going to move. That might be a little low, but if I remember reading that stat correctly, that within the first 2 years of retirement, there's like 18% of retirees or 100% selling their property and just moving to a different state. And over time, that number increases quite substantially to like 34, 33%. And then some people just stay exactly where they're at. And that's where they're going to pretty much, kick the bucket, basically. So, yeah, and that's right. And then, yeah, he looks for danger. Yeah, he mentions that they know real estate lags behind the markets. And this is why I'm saying if we're going to have a low in the market, the low in the market is going to be probably at the absolute low, like the earliest we're going to have the bottom of the real estate market is going to be Q4 of this year. But I don't even believe that, really. Like, it's more than likely going to be in Q1 to Q2 of 2024. It's going to be the bottom of that market, and it's probably going to be spurred along with, like, the whole the campaign promises and stuff like that. So that might be the bottom there. So, waiting. I would, for most places in the United States, and I would even say most places around the world as well. As as the United States real estate market takes a dump, it crashes a lot of other markets as well. right now we're getting layoffs of white collar workers, mostly in the tech sector, high paying jobs. That takes a while for that to trickle down. For I've said this before. So when you lose white collar jobs, eventually that does lead to blue collar job loss. But there's blue collar business owners and white collar business owners. And what happens to the business owners is that there are businesses that go out of business, but typically what ends up happening with a lot of businesses, especially if they're already profitable, is that they just make less money, which is reduce spending and reduce hiring and stuff like that. So um I would definitely be looking if you're going to buy real estate, if you're going to be, especially if you're buying more with a heftier amount of money and stuff like that, probably looking towards December. Usually the December months when everything's cold is the best time to be buying anyway, just because there's less people looking for properties. Everyone like, trust me, this is the stuff that happens typically is that the significant other in the relationship and even yourself possibly could get honey dicked into looking to houses when it's nice and pretty, right? But you usually want to be buying houses when it's gloomy and dark and cold outside. You less competition, and you'd probably get a better price for that property. Now, with the increased rates, I mean, this is kind of the problem is that with the huge increase in rates we've had, right? We've gone from 0 to 4.5% on that market. So it means with really good credit, you're getting 7 to 8%. Maybe 6, maybe if you can get fine with some sweetheart deal, but the amount of crash in the real estate prices to how high the interest rates have gone just don't add up. It's even more expensive than it was technically in terms of the payment, which is really how. I mean, let's just be for real here. Like most people do not have the money to actually buy a property straight up in cash. So what they're doing is they're doing payments, right? So you just potentially made it harder for most Americans, even right now, even with real estate market being down somewhere between 10, 11 on 10 to 13% on the kind of decenter markets to somewhere like the rat infested commie few now of Portland and San Francisco being down 34%. That's the 34% down. It does not equal up how much more you have to pay in interest because of the 7% interest rate that you're going to be paying on the loan for 30 years annualized. So dang. So that real estate one is going to start lagging on the market a little bit, but we could still have now. There's the real market versus the capital market, which is where we're invested in. So we could be having a kind of a stupid bull market while everything's on fire. So dang.
The issue is that we have a large sector called core non-housing services where we don't see disinflation yet. But I would say that so far what we see is progress, but without any weakening in labor market conditions. Go ahead.
Has your expectation for where the unemployment rate might go changed since December?
You know, we're going to write down new forecasts at the March meeting, and we'll see at that time. I will say that it is gratifying to see the disinflationary process now getting underway.
Just started.
And we continue to get strong labor market data. But you know, we'll update those forecasts in March.
Neil. Hi, Chair Powell. Neil Irwin with Axios. You and some of your colleagues have emphasized the possibility that job openings could come down and that would let some of the air out of the labor market without major job losses. We saw the opposite in the December JOLTS this morning, job openings actually rising. That also has coincided with slowdown in wage inflation. Do you believe that openings are an important indicator to be studying to understand where the labor market is and where wage inflation might be heading?
So you're right about the data, of course. What we've seen average hourly earnings and now the employment cost index abating a little bit, still off of their highs of 6 months ago and more, but still at levels that are fairly elevated. The job openings number in JOLTS has been quite volatile recently, and I did see that it moved back up this morning. I do think that it's probably an important indicator. The ratio, I guess, is back up to 1.9 job openings to unemployed people who are looking for work. So it's an indicator, but nonetheless, you're right. We do see wages moving down. If you look across the rest of the labor market, you still see very high payroll job creation, and quits are still at an elevated level. So by many indicators, the job market is still very strong.
Still strong, you guys.
Thank you. Colby Smith with the Financial Times. Given the economic data since the December meeting, is the trajectory for the Fed funds rate in the most recent SEP still the best guidepost for the policy path forward? Or does ongoing now mean more than 2 rate rises now?
Ooh.
So you're right. At the December meeting, we all wrote down our best estimates of what we thought the ultimate level would be. And that's obviously back in December. And the median for that was between 5 and 5.25%. At the March meeting, we're going to update those assessments. We did not update them today. We did, however, continue to say that we believe ongoing rate hikes will be appropriate to attain.
Damn, he's trying to squirm his way out of saying, yeah, like we're going to do more than 2 more raises. Damn. So it means the Fed pivot has been like the post has been lengthened out. So at the now, like the Fed pivot should have happened in March now. At the soonest, the next Fed pivot is now going to be somewhere, I think, May 4th now for the next meeting. So that means usually when they decide we're no longer going to increase interest rates anymore, you have a nice little crash there. Historically, that's what's happened. So now this crash of them pausing rates is basically been lagged out for another like 2 more months. Interesting. Now this is both good and bad. Now it's bad for people. It's bad for people in the regular world, right? But us crypto bros and us people in equities and shit. This is great for us because this means the kind of like pump rally we're kind of having right now just gets extended for longer. So that means we get to have some pumps in the market now. That means like it's possible. Like no, not even possible. Maybe the top end's more iffy, but like it means that within $30,000 to $50,000 BTCs in the cards, just for like a crazy pump. And this is kind of what I've been talking about us kind of repeat now. We're rhyming with 2019, but doesn't mean it's repeating. It's a different story, but it just sounds the same, right? We had kind of like the one token. Now this is kind of a hex sort of thing right now. Now some people may fight it, but I'll just say it right here, right? Like there, why did Bitcoin go from 3,000? Probably should have just chilled out between 6 to 8K. Why did we pump all the way to 14,000, right? And a lot of people believe it was the one token Ponzi, which is this Chinese Ponzi, where people had to turn their Chinese currency and dollars they had into Bitcoin in order to get into this MLM pyramid scheme, Ponzi basically. And this pumped the crap out of the Bitcoin price. And then basically when the guys got arrested, basically within a day or so, Bitcoin topped out at 14 grand, right? So you got to think about how significant of a pump that is to go from February of 2019, $3,100 low to a couple, 4 or 5 months later, we were at $14,000, where the top was 20 grand, 19 grand, depending on where you track it. So imagine that. Let's just say the 15K was the low, or maybe we crashed down a little bit. We go to 11K. So going from 11K back to 50, where our all-time high was 69,000. That's about the range there. Maybe 44,000, depending on the. So this whole narrative thing that I've been seeing since like middle of last year, of 2022, of that it's very likely that we're in a 2019 type of year, that we're more than likely going to see a very rapid increase in the price of Bitcoin and Ethereum. Yay for us who've been buying. Yay! As a matter of fact, I'm going to give us some Pepe. That's awesome. Baby, shoo! Give me that money, yo! God damn, son, Jerome Powell just out here pumping bags, man. Sheesh. So because of him being so fucking timid with these little like baby dick, like 25 basis point, like no pump chump increases, it's over the time it's tightening the screws, but it's not enough to like shock the market into like being scared. So we're still like, the market is a market of degenerate degenerate alcoholic gamblers who are jonesing to gamble, and they've been kind of risk off for a minute now, and now they're starting to buy up and they're starting to do stuff, and then like look what's happened. Like a lot of the altcoins that we're in right now, like fucking Phantom, 18-cent low, we're at 69 cents. Alluvium, $38 low, damn near $100. Hex, 1.8-cent low, 3.2 cents now. Hedron, 10. I don't even know where it's at right now, but it's higher. Yeah. What are we talking about? Even if we just perform with BTC, shit, man, we're all happy. We've all been buying the lows. So shout out to all 166 of you, man. Shout out to my boys, man. We out here winning, man. Everyone else needs, I don't know how many needs. Like we made in what, 6 months what it takes the equities market 5 years, 7 years to return. 6 months, you guys. Like, oh, crypto's not a hedge against inflation. Well, it's a hedge against me being broke as fuck like you guys. Crypto is a game of attrition. What did I say? Those who stay get rich. Those who leave go broke. That's facts. Maths. Shout out to Kareem. But facts. But I promise you, there's going to be a dump in the end of the year. It could be somewhere in the end of summer, maybe fall. There's going to be a course correction, and we are going to dump back down. So I mean, I want to say this right now. I'm trying to say this on all my streams, you guys. There's going to be a pump to 40, maybe 50. 50 is kind of on the high end, personally. But I think between 30, like mid 35 to like $44,000 BTC. I'm using that as kind of the range there, just so we can have some kind of like bellwether and stuff like that. I think this pump's going to be mostly led by Ethereum, personally. I believe if we do hit sort of that whole level of we actually have more of a chance for Ethereum to touch its all-time high, and Bitcoin just kind of lagging behind it, like the $45,000 range. Then we do Bitcoin actually touching its all-time high. Then we are going to crash back down to 21K BTC. And maybe then we can actually get the real low at that point. But we are going to have a nice big pump this year, and we're going to have a nice little 50% plus correction at the end of the year. And I just hope some of you guys on some of these multiples just take a little, maybe by the time we get back up to let's just maybe in 3 or 4 months come back to this. And we're like, woo, tits out and everything, right? And so when our altcoins are up 4 or 5x, maybe, I don't know, Miguel's crazy here, maybe sell 20%, 30% into USDC, all the money you DCA'd in, and just leave the rest there. And if it crashes, you got all the cash that you DCA'd in your hand, and you still got coins. Because I think it's stupid not to have coins, but psychologically, I think it's a nice idea to hey, now look, I DCA'd $25,000 over these last 1 year. Now I got my $25,000 back, and I got all these casino I got all these poker chips, baby. These aren't $5 chips, baby. These are thousands, baby. All these chips that you guys have been DCAing in this entire time, man. All these chips you guys have been DCAing into. Now you got all the money back, and you're playing with casino money. Doesn't that sound nice? Doesn't that sound nice? Doesn't that put you in a mental state where you will make better financial decisions? Because all the coins you have, all the coins you have on the play, casino chips. And you got all the cash, and then once we get a dip back down, then you can reinvest them if you like, or put them back in your bank, or however you like. I mean, obviously, that is at the end of the day, you are the one who pushes the green or the red button. Think about that for a second. Just a little bit of profits, nothing crazy. Now, everyone's going to be different. Some people bought a little higher, and so at the end of the day, that is a responsibility that you're in a decision you have to. Some people said, no, you know what? I'm not selling him. I'm not trying to create myself a taxable event. That's okay. But I just want to give you guys the ability to have that ability to maybe do that decision, and then let's go. I'm not saying sell everything. I think that's terrible. I'm not doing that. Even with the bull market, even when the bull market was over, I didn't sell everything because I still was yielding, DeFi, and doing all this other stuff and everything like that. But I took profits, yes, but I didn't sell out of everything. I sold out 80% of everything, but I still kept 20% bag. What I'm talking about here is maybe selling a 20, 30% position off just to have some extra cash. Maybe you have 1.5 times your amount. So in that $25,000 DCA example, maybe you pull out $37,000 from $25,000 you invested. Yeah, you got the USDC there. Still got your coins there. Still maturing to make sure you have long-term capital gains for the future when the gains get redonkulous. So you have a lower taxable income. But it's to give you that, like, now I don't always agree with Dave Ramsey here, right? But he is right about this whole thing about the snowball method and stuff like that. People, a lot of times the way you end doing things correctly, it's not the most efficient way, but it's the most psychologically easy way for you to be able to actually do it. And what that is to have a peace of mind to go to sleep at night. Well, like, I got a lot of coins in the market and stuff. Oh, my net worth has gone down. But do you still have the cash? Yeah, I have cash. It means that when you're buying, you ain't selling. This is something that I've said over years. If you're not buying, you're not selling, right? If you're buying, you ain't selling. If you're not buying, you feel like selling. What happens is when you DCA every week and stuff like that, oh, I just DCA'd. You've reaffirmed your position. But when you're not buying, the doubt devils get in your head. Now, you may have coins I don't agree with, or you may have all the coins I agree with. But at the end of the day, by you making the decision and stuff and you DCAing consistently and stuff over this market, what did I say? This entire year is this asymmetrical return. This entire year is an asymmetrical return. You can pretty much just shotgun and buy most assets, and you're going to do in crypto outside of really bad. Obviously, like really horrible projects. But for the most part, you can buy really decent projects at good prices, and you're going to be up over the next 2 years. No other industry you're going to do that. You can't make those kind of returns. You have to get into the most like speculative in biotech, or maybe weed stocks, or maybe like I don't know, like mushroom stock. You have to get into the craziest stuff or use insane amounts of leverage. But like, just imagine that stuff. Hex is up damn near 2x. Ethereum is up like damn near 2x plus. Some altcoins are up 3x's or 4x's. I bought Beats at like 2 cents, and it's at 7 cents right now. There's gains out here. Do you know how long it takes to double your money in the equities, you guys? It takes 7 to 10 years depending on your returns. So in 6 months of DCAing, of like a good chunk of that bottom, that's where we're really out. Where we were kind of dynamically DCAing in the market. We returned ourselves so much capital, and I really think people don't truly understand how powerful what we just did right there. And we bought, if that was the bottom right there, if we bought the bottom, we bought the bottom. A lot of people, trust me, I was out here, man. Me and Charlie, I wasn't seeing a lot of channels buying the bottom. Shout out to Matty Allen and a couple of Hexagons and stuff. There's some coin specific channels that maybe were buying specific coins, but broadly, there was a lot of channels who were fucking quiet as a fucking church mouse. And we were some of the only people on YouTube, podcasts, Spotify, anywhere telling people to buy cryptos. Baby. So let's get back to it, man. I'm holy ghosting over here.
a sufficiently restrictive stance of policy to bring inflation back down to 2%. We think we've covered a lot of ground, and financial conditions have certainly tightened. I would say we still think there's work to do there. We haven't made a decision on exactly where that will be. I think, we're going to be looking carefully at the incoming data between now and the March meeting and then the May meeting. I don't feel a lot of certainty about where that will be. It could certainly be higher than we're writing down right now. If we come to the view that we need to write down to move rates up beyond what we said in December, we would certainly do that. At the same time, if the data come in the other direction, then we'll make data dependent decisions at coming meetings, of course.
Just as a quick follow-up, how are you viewing the kind of balance of risk between those two options of, the likelihood of maybe falling short of that or going beyond that level?
I guess I would say it this way. I continue to think that it's very difficult to manage the risk of doing too little and finding out in 6 or 12 months that we actually
This is very key.
were close, but
I'm gonna rewind this a little bit. This is such a key point. He was so kind of like, oh, this chick right here, really, look at that. He's like, really, this chick really asked me that. Oh my God. Well, this is that whole thing of them. They would rather over tighten than under tighten. So at some point, if they start noticing the CPI numbers and everything starts going up, they are going to nuke the market, man. Like what my most likely scenario for what I think is going to happen, right? Let's just say the most bullish bad scenario, but it's good for us, but kind of bad for the market is they kind of lag out the Fed pause to maybe somewhere in the middle of the summer. Kind of nice. We pumping good, and then equities keep pumping. Stocks keep pumping. Real estate will keep kind of trending downwards. And what will end up happening is this, because stock and equity is going back up, the CPI starts going back up. And the Fed freaks the fuck out and hits us with like a 200%, a 100%. Bam. Bam. That right there, that like, his angry face, like turn him red and shit, put Bitcoin, give him the Bitcoin eyes and stuff, and go like that, right? That'll nuke us back down from like, let's just say if we're at $45,000 range, like somewhere in that $44,000 range, I'm sorry, on BTC. That'll take us back down to 20K. Karn right here, this is why he's a mod. Pal, I will break this market's back before I stop raising these rates. I will break this market back before I stop raising these rates. So let's re-listen to that with that key information now that I've just said right now. Let's re-listen to that back a little bit and see if we can understand what he's trying to say here.
Just as a quick follow-up, how are you viewing the kind of balance of risk between those two options of, the likelihood of maybe falling short of that or going beyond that level?
I guess I would say it this way. I continue to think that it's very difficult to manage the risk of doing too little and finding out in 6 or 12 months that we actually were close but didn't get the job done, and inflation springs back and we have to go back in. And now you really do worry about expectations getting unanchored and that kind of thing. This is a very difficult risk to manage. Whereas of course, we have no incentive and no desire to over tighten, but if we feel like we've gone too far, we can certainly and inflation is coming down faster than we expect, then we have tools that would work on that. So I do think that in this situation.
So he just said if we over tighten, we can just chill back and pull back rates because we can always like calm down and ease easier than we can tighten. So it's always easier for us to fucking overhurt the market because we can take it back a little bit and that'll fix it. Then if we don't tighten enough and then we entrench inflation, then we're in big trouble. And then we have to do dramatically horrible things that could send us into a depression, is what he's saying here.
Where we have still the highest inflation in 40 years, the job is not fully done. As I started to mention earlier, we have a sector that represents 56% of the core inflation index where we don't see disinflation yet. So we don't see it. It's not happening yet. Inflation in core services X ex-housing is still running at 4% on a 6 and 12-month basis. So there's nothing happening there. In the other two sectors representing, less than 50%, you actually, I think, now have a story that is credible, that's coming together, although you don't actually see disinflation yet in housing services, but it's in the pipeline, right? So for the third sector, we don't see anything here. So I think it would be premature, it would be very premature to declare victory or to think that we've really got this. We need to see, our goal, of course, is to bring inflation down. And how do we get that done? There are many factors driving inflation in that sector, and they should be coming into play to have inflation, the disinflationary process, begin in that sector. But so far, we don't see that. And I think
Now let me say one more thing. So that first example that I told you guys about, like, let's just say is more than likely we're going to get, best case scenario, the Fed pivot's going to be in May 4th, but it very likely could be somewhere in the middle of the summer when they do the pause. That might be a small dip there, but then that really bad dip where like it could be like, holy crap, could actually happen a year later, because what they're talking about, like, what if we didn't tighten enough and then it comes back? So what happens if they tighten, they nuke us down a little bit because the CPI is going up a little bit, or the Fed pause might be enough to crash us from 35,000 that back down to 18 to 21K BTC, then we start pumping up. We were in the bull market into 24, and then, oh man, and this is the dangerous thing, is that now this is more of a more likely scenario, is that because of the presidential election, they won't really try to do anything too much because the president and stuff like that. But once all that shit's said and done, and then the inflation starts going out of control, he's like, oh crap, this is starting to get up again, because we've had like a half of 23 be a bull market, and then all of 24 be pretty decent, and now we're entering 25. They may have to do something dramatic and just nuke us in order to get it back down, because they're like, holy crap, it's going crazy, and then that could end the whole bull market right there. So that's kind of so far what I'm kind of crystal balling here. This is with chicken bones, a little bit of bison meat, but this is what I'm seeing so far right now of like what's now. It's kind of semantics of playing whether it's going to be more of a May pivot versus a late summer pivot, but that's what I'm seeing right now in the market. And obviously, I probably, at the most, if they were really going to pussyfoot around, I think I'd rather them pussyfoot around with like 50 basis point increases. And then when they got closer to the summer, then go to 25s from there. I think they should have done one more 75, went to two more 50s, and then did the 25s. And then this shit would have been done with, and then we could just have a normal bull market. But it would have made 23 more of a wash. It's a little bit more of like bad medicine to sip on, but at the end of the day, it's just, to fix this whole shit up, and then we can have another decade of nothing but up and to the right. But it just is what it is.
until we do, we see ourselves as having a lot of work left to do.
Howard Schneider with Reuters, and thanks as usual. So I just wanted to connect a couple dots here. The statement made a number of changes that seem to be saying things are getting better. You're saying inflation has eased. That's new. You've taken out references to the war in Ukraine as causing price increases. You've taken out references to the pandemic. You've eliminated all the reasons that you said prices were being driven higher. Yet that's not mapping to any change in how you describe policy. We still have ongoing increases to come.
Jerome Powell is
So I'm
top
wondering,
door.
why
Top
is that
door,
the
baby.
case?
Top door.
And does it have more to do with uncertainty around the outlook, or more to do with you not wanting to give a very overeager market a reason to get ahead of itself and overreact?
So I guess I would say it this way. We can now say, I think, for the first time, that the disinflationary process has started. We can see that, and we see it really in goods prices so far. Goods prices is a big sector. This is what we thought would happen since the very beginning, and now here it is actually happening. And for the reasons we thought, it's supply chains, it's shortages, and it's demand revolving back towards services. So this is a good thing. But that's around a quarter of the PCE price index, core PCE price index. So the second sector is housing services, and that's driven by very different things. And we, as I mentioned, with housing services, we expect, and other forecasters expect, that measured inflation will continue moving up for several months, but will then come down, assuming that new leases continue to be soft. And we do assume that. So we think that that's sort of in the pipeline. And we actually see disinflation in the goods sector, and we see it in the pipeline for two sectors that amount to a little less than half. So this is good. And we note that when we say inflation is coming down, that this is good. We expect to see that disinflation process will be seen, we hope soon, in the core goods X housing, the core services X housing sector that I talked about. We don't see it yet. It's 7 or 8 different kinds of services. Not all of them are the same. And, we have a sense of what's going on in each of those different subsections.
Now I'll pause you here for 1 second. DSG actually had a very interesting question right here. If interest rates keep rising, does that mean with the cost of borrowing fiat going up, that might push people more into crypto lending? Yes, but for the most part, I don't recommend people lending out your crypto, or even on stuff you could leave in third party. For the most part, like you could if it's decentralized and all that other jazz, but like it's got to be high enough for you to do that. So maybe it could eventually. It could make it more competitive where people might go out to it. The one nice thing about borrowing on crypto is that if it's collateralized lending versus just a blind borrow. That is the one uncompetitive thing about crypto is this, like, the banks sometimes the banks just lend you an uncollateralized loan sometimes not, versus you actually have to have money in the space to know or borrow money on it and stuff like that. And for the most part, I would not recommend any of you guys like take your crypto and borrow on it. I think it's really stupid for the most part, outside of some whales if they want to do something crazy, but like it's just so. If you do, like, let's just say you put a whole Ethereum up just because you need a quarter of the value of it, and just sell a quarter of the fucking Ethereum and just keep, you have 75% of Ethereum left over. But I get the whole gist of it, where like if you do it at the right time, you can pay back the loan, or it gets so cheap. Like it works at a specific point of time, but then it also fucks you on the bad end. So if you're really bad at market timing, which most people are, and you borrow at the wrong time, because people always want to borrow in crypto when the prices are fucking sky high, not when they're low. They want to borrow when it's sky high, because then their big dollar goes further on the 25% LTV or whatever the hell they were borrowing at, maybe higher on Aave. And then when the market starts going down, they get liquidated on what's left over, and then they keep it's just big cluster. That's how people lose a lot of their crypto, man. So maybe it does get, for a time, it could actually make it competitive for a second, but it won't last very long. No. Oh, I'm sorry. Which one? There we go. Sorry. Do we not learn the lessons from Celsius? No, people did not, and people will forget, as well as people are still doing it now with Aave. Now, some people think. There's reasons for it, maybe big whales and stuff, but for the average user and stuff, like, just is what it is. Dustin Olson, just because you a long-term follower. DCC, looking for historical Fed pivots in the past 100. Once a pivot happens, the market dumps hard. Do you see that happening once we officially stop? Yes, I do. I do see that. And that's just for pausing rates. There'll be a nice little dump, and I think that when whether that happens in May 4th, which it's looking more or less likely that looks like it's going to be somewhere in the summer, June or July, when that happens. And then we'll dump down, and then the rest of the year we'll pretty much go back. We'll start recovering and going back up, basically, and then we'll go into 24 and we'll start really having a nice bull market at that point. But because that's entering like 2020 and stuff. But if we are in sort of a left translated cycle and stuff, that would basically mean that our bull market top would be in 24. But if it's more of a normal cycle, it'll be somewhere like a 25. It's looking like right now more of a 25 year than a 24 year. But regardless or not, if we're up stupid amounts of money, just take a little off the table. And if shit gets crazy, like in 24, we should have some nice run on altcoins. And if we go into 25, beautiful. Because you guys are in right now at the lows, or very close to the lows in 2019. We ran for 2020. 2021, and for some of you guys who were in a lot of the good alts and stuff on Phantom, I'm just saying, as if you're in some of the action spots, people are still making tons of money in crypto up until March and April of 2022 before it took a fat shit. So interesting.
Probably the biggest part of it, probably 60% of that is research would show is sensitive to slack in the economy. And so the labor market will probably be important. Some of the other ones, the labor market's not going to be important. Many other factors will drive it. In any case, we don't see disinflation in that sector yet. And I think we need to see that. It's the majority of the core PCE index, which is the thing that we think is the best predictor of headline PCE, which is our mandate. So it's not that we're neither optimistic nor pessimistic. We're just telling you that we don't see inflation moving down yet in that large sector. I think we will fairly soon, but we don't see it yet. Until we do, I think we see ourselves, we got to be honest with ourselves. We see ourselves as having perhaps more persistent inflation in that sector, which will take longer to get down. And we're just going to have to complete the job. I mean, that's what we're here for.
Interesting point.
Nick Timmeros, the Wall Street Journal. Chair Powell, you observed several years ago that we learned we can have a low unemployment rate without above target inflation. And we have learned lately that inflation can come down from its uncomfortably high level despite a historically low unemployment rate. Given that, and given how much you did over the last year, why do you think further rate increases are needed? Why not stop here and see what transpires in the coming months before raising rates again?
Woo!
So we've raised rates 4.5 percentage points, and we're talking about.
Damn, the Wall Street Journal coming with the saucy questions. Here we go. Let me hear that again, man. Damn, that was a saucy question, man. That was pretty frank, like asking of a question, man. Heck yeah, man.
Level, despite several years ago that we learned we can have a low unemployment rate without above target inflation. And we have learned lately that inflation can come down from its uncomfortably high level despite a historically low unemployment rate. Given that, and given how much you did over the last year, why do you think further rate increases are needed? Why not stop here and see what transpires in the coming months before raising rates again?
Shout out to the Wall Street Journal, man. That was a question right there, man. Franklin, Wall Street will be on the ass, man. And that's mostly you can tell that's from like, hey, bro, I want my stocks to pump. Oh, man. God bless this Wall Street Journal, man. That's funny as hell.
So we've raised rates 4.5 percentage points, and we're talking about a couple of more rate hikes to get to that level we think is appropriately restrictive. And why do we think that's probably necessary? We think because inflation is still running very hot. We're, of course, taking into account long and variable lags, and we're thinking about that. The story we're telling about inflation is to ourselves, and the way we understand it is basically the three things that I've just gone through a couple times. And again, we don't see it affecting the services sector ex housing yet. But I mean, I think our assessment is that we're not very far from that level. We don't know that, though. We don't know that. So I think we're living in a world of significant uncertainty. I would look across the spectrum of rates and see that real rates are now positive, right, by an appropriate set of measures, are positive across the yield curve. I think policy is restrictive. We're trying to make a fine judgment about how much is restrictive enough. That's all. And we're going to, that's why we're slowing down to 25 basis points. We're going to be carefully watching the economy and watching inflation and watching the progress of the disinflationary process.
Did you or your colleagues discuss the conditions for a pause at this meeting this week?
You'll see the minutes will come out in 3 weeks, and we'll give you a lot of detail. We spent a lot of time talking about the path ahead.
And when those minutes come out, I'll talk about them and stuff. It'll be interesting. He asked a really interesting question there. He's like, did you guys talk about possibly pausing? So in 3 weeks, when those do come out, we'll might have a bit of more of a clearer picture. The beautiful thing is that 3 weeks will pretty much be the end of end. 3 weeks, yeah, in 3 weeks, and pretty much it's going to be around the 20th and stuff. That means it could be possible some of the guys get it a week earlier, and maybe that coincides possibly with we think maybe we'll get a bit of a small dip and stuff like a little bit before or after Valentine's Day. So obviously people do get these things earlier than others.
And the state of the economy, and I wouldn't want to start to describe all the details there, but that was the sense of the discussion, was really talking quite a bit about the path forward.
Victoria.
Hi, Chair Powell. I wanted to ask about the debt ceiling. Given that we've now hit up against it, I was wondering if the U.S. goes past the X date, will the Fed do whatever the Treasury directs as it relates to making payments as the fiscal agent, or will it do its own analysis of any legal constraints?
So your question is, would we?
Damn, that was a very compromising question to ask Jerome Powell right there, man. He's like, if they are you gonna damn, she really asked that? Holy snap, that was a crazy question. Yo, I'm telling you, this is some of the spiciest questions I've seen him being asked, man. This is kind of crazy. He basically was asked, like, if the debt ceiling doesn't happen, are you still just gonna be sending the checks to the Treasury?
Hi, Chair Powell. I wanted to ask about the debt ceiling. Given that we've now hit up against it, I was wondering if the U.S. goes past the X date, will the Fed do whatever the Treasury directs as it relates to making payments as the fiscal agent, or will it do its own analysis of any legal constraints?
So your question is, would we? Say your question again.
Will the Fed do what Treasury directs as it relates to?
He's like, he had to take a double take. Yo, repeat that shit again one more time. Holy snap! Wait, hold on. I don't want to answer. I don't want to get in trouble right now.
Making payments, or will it do its own analysis of any legal constraints?
So you're really asking about, but you're asking about prioritization in effect, is what
Yes.
you're okay.
Yes.
So I feel like I have to say this. There's only one way forward here, and that is for Congress to raise the debt ceiling so that the United States government can pay all of its obligations when due. And any deviations from that path would be highly risky, and that no one should assume that the Fed can protect the economy from the consequences of failing to act in a timely manner.
Damn!
In terms of our relationship.
Whoa! Did you just hear him say what I just heard? Wait, what? He said these motherfuckers don't like keep the printing of money to pay these things off, man. We're gonna get into such a shitstorm that we can't save this shit. It's whoa. Did Jerome what? You guys, this is what I'm saying. 22 minutes into this dry ass thing, man. People don't. There's only like, look, 2.3 million subscribers, only 112,000 views, and I bet you that that's really only probably 28,000 people, because you got to imagine how many people have just rewatched it over and over. Like, there's probably only 28,000 people individuals that have probably seen this video right here that even heard, and then how many people that even got halfway into it just to hear that. So we're talking about maybe 7,000 to 8,000 people that even heard this right now. Wow. Yo, that was some dark shit coming from Jerome right there, man. He was like, no, there's no, we need to make sure that we raise that debt ceiling so we can pay these people and make sure these bonds are being paid and stuff. Because if not, man, the shit is going to go down, you guys.
Legal constraints.
So you're really asking about, but you're asking about prioritization in effect, is what
Yes.
you're okay.
Yes.
So I feel like I have to say this. There's only one way forward here, and that is for Congress to raise the debt ceiling so that the United States government can pay all of its obligations when due. And any deviations from that path would be highly risky, and that no one should assume that the Fed can protect the economy from the consequences of failing to act in a timely manner. In terms of our relationship with the Treasury, we are their fiscal agent, and I'm just going to leave it at that.
Are you actually doing any planning of what might happen in the event that
Woo! Jerome Powell fucking out here, man. Laying it down, dude. That was like, hey, man, no. Woo.
Manner. In terms of our relationship with the Treasury, we are their fiscal agent, and I'm just going to leave it at that.
are you actively doing any planning of what might happen in the event that would happen?
I'm just going to leave it at that.
Mitch,
This is a
next,
matter that's
next.
to be resolved between it's really Congress's job to raise the.
Said
doing
bitch
any planning
next.
of what might happen in the event that would happen?
I'm just going to leave it at that. This is a matter that's to be resolved between it's really Congress's job to raise the debt ceiling, and I gather there are discussions happening, but they don't involve us. We're not involved in those discussions. So we're the fiscal agent.
Damn, son. No comment. Next,
Gina
bitch.
Smiler from the New York Times. Thanks for taking our questions. I wonder, was there any discussion today of the possibility of pausing rate increases and then restarting them? Lori Logan from the Federal Reserve Bank of Dallas seemed to suggest that would be a possibility in a recent speech. And I wonder if that view is broadly shared on the committee.
So the committee obviously did not see this as a time to pause. We judged that the appropriate thing to do at this meeting was to raise the federal funds rate by 25 basis points. And we said that we continue to anticipate that ongoing increases in the target range will be appropriate in order to attain that stance of sufficiently restrictive monetary policy that will bring inflation down to 2%. So that's the judgment that we made. We're gonna write down new forecasts in March, and we'll certainly be looking at the incoming data as everyone else will.
Sorry, I should have been clear. I mean, would it be possible to take a meeting off, for example, and then resume? Could you, rather than just doing at every meeting a move, go a little bit more slowly, take some gaps in between moves?
I mean, I think this is not something that the committee is thinking about or exploring in any kind of detail. In principle, though, we used to do was go every other meeting, if you remember, 25 basis points, and that was considered a fast pace. So I think a lot of options are available, and
So he says so he's basically saying they're being super, super careful. They're literally having debates every single month instead of it being every other month or every quarter. They're doing these meetings and everything like that. They're doing it on a monthly scale. They're so worried about doing this incorrectly that they're really overanalyzing this thing because they are very worried about what's going to happen and stuff. So I mean, just to hear him on national television say no, I mean, this is the guy, man. This is the guy of the U.S. economy right here saying, fuck the head of the U.S. Treasury. No. Jerome Powell over here saying they need to raise that debt ceiling. They need to stop fucking around about that shit. People need this money needs to be printed out and paid, or there's going to be trouble. And we can't say if the debt ceiling is not raised, we can't save this thing, dude. Only here, Dog Cost Crypto. Do you hear all this stuff, man?
something that the committee is thinking about or exploring in any kind of detail. In principle, though, we used to do was go every other meeting, if you remember, 25 basis points, and that was considered a fast pace. So I think a lot of options are available, and I mean, you saw what the Bank of Canada did, and they left it that they're willing to raise rates after pausing. But this is not something that the Federal Open Market Committee is on the point of deciding right now.
Man, that was handled so well. What he just said. He mentioned another. He mentioned another central bank, the Central Bank of Canada, pausing rates. And dude, that was so masterful because he could have like, yeah, we're not like this crackerjack. we're not like this we're not like this 2-bit fucking crackerjack Federal Reserve like Canada has and stuff like that. We're really paying attention right now and stuff like that. Man, he handled that like a master, man. He didn't talk any shit. That was incredible, man.
Did, and they left it that they're willing to raise rates after pausing. But this is not something that the Federal Open Market Committee is on the point of deciding right now.
Steve Leisman, CNBC. Mr. Chairman, the SEP has the PCE inflation rate in 2023 at 3.1%. Meanwhile, the 3-month annualized PCE is 2.1%. And you've achieved this without going to your 5.1% funds rate, which is what you have penciled in for this year. And you've also achieved it without the 1 percentage point increase in the unemployment rate, which you've have penciled in for this year. I'm wondering if you've considered the idea of whether or not your understanding of the inflation dynamic may be wrong, and it's possible to achieve these things without raising rates that high, and also without the surge in unemployment. And specifically, I wonder if you might comment on the speech given.
Yo, this dude is trying to trip him up, man. Holy shit. What a fucking run-on question, man. Jesus, CNBC out here trying to gouge this dude. Whoo! Dang, man. He basically asked, like, he basically said, like, is it possible you guys are really stupid and you guys don't know what the fuck you're doing with this whole thing, and then you guys don't have to raise rates at all, and you guys are just full of shit? Wow. Damn, dude. I gotta rehear that entire question. That was incredible.
0.1% funds. The SEP has
This is not something that the Federal Open Market Committee is on the point of deciding right now.
Steve Leisman, CNBC. Mr. Chairman, the SEP has the PCE inflation rate in 2023 at 3.1%. Meanwhile, the 3-month annualized PCE is 2.1%. And you've achieved this without going to your 5.1% funds rate, which is what you have penciled in for this year. And you've also achieved it without the 1 percentage point increase.
So they're saying they've hit certain parameters for the inflation going down before they even hit their goal of hitting, like, you know, basically 5% to 5.25% in the Federalist fund rate. And that's kind of indicating to what he's saying to him is that, like, they're already doing sufficient jobs, so they really shouldn't be increasing rates because it's starting to go down. So maybe they're over fucking tightening a little bit, which is, you know, they shouldn't be doing that so far. And that's correct, sir. This is like watching a financial telenovela. That is correct. DCC. Tricolor. Bienvenidos a esta telenovela del dinero con Miguel.
In this year. And you've also achieved it without the 1 percentage point increase in the unemployment rate, which you have penciled in for this year. I'm wondering if you've considered the idea of whether or not your understanding of the inflation dynamic may be wrong, and it's possible to achieve these things without raising rates that high, and also without the surge in unemployment. And specifically, I wonder if
he should have stopped the question right there, let him answer that part, and then ask him the second part of the question or the third part of the question there. But like then he just ran on sentences to make him to almost like he was trying to make him forget or something. You know, like I mean, a few people actually know how difficult this is actually to be asked questions on live and stuff. We do this on Fresh and Fit all the time, and I do this on stream and stuff. Like I've been asked these sort of like questions and stuff like this in the crypto space. Now this is in his market, right? But I've been asked very complex questions in the crypto space and had to answer point blank like that and like it is quite. You actually really have to know your shit in order to even answer back or even to bullshit and answer back. Actually, because people are very bad on live and stuff. So this is like one thing me and Charlie have always kind of really like practiced over the years is doing these live forums and like I'm answering your questions in live right now, you know. So it's like This is a quite interesting. I mean, that's a real asshole way to ask a question, man. Dang, dude.
If you might comment on the speech given by Vice Chair Lael Brainerd, who said, to the extent that inputs other than wages may be responsible in part for important price increases for some non-housing services, an unwinding of these factors. In other words, it may not be wages. The idea that it may not require unemployment rising to get this sector of inflation under control. Thanks.
So a couple things. First, on the forecast, if you're right, if you take very short-term 3-month say measures of PCE, core PCE inflation, they're quite low right now. But that's because that's driven by significantly negative readings from goods.
And what he's talking about right there about these 3-month short-term readings, and that's mostly sort of a thing propagated sort of by. I would say a lot more people look at these sort of things because the way the U.S. stock market is kind of built out right now, we have quarterly earnings that come out. So people are always looking at forward guidance in 3 months sort of sector spans and stuff like that. So people in the equities market look very closely at these kind of quarterly sort of things and stuff like that. And this is something that, if I remember correctly, I think, what's his name? Warren Buffett was kind of pushing for, I think, maybe a couple years ago, of like getting away from doing these quarterly earnings crap and going to maybe 6 month or yearly earnings. I'm probably more leaning towards like 6 months, like two reports per year instead of these quarterly earnings, because it allows companies to do a little bit more long term investments. But and it kind of stops the speculation a little bit there and stuff like that. But Jerome's kind of saying like, bro, like you're looking at these little short-term 3 month bullshits. This isn't really how we look at the market and stuff. We look more of a long-term 1 year sort of brackets and stuff like that, instead of these little short 1 month or 3 month little indicators.
Inflation. Most forecasters and would think that the significantly negative readings will be transitory, and that goods inflation will move up fairly soon back up to its longer run trend of something around zero, something like that. So a lot of forecasts would call for core PCE to go back up to 4% by the middle of the year, for example. So that's really where the sustainable level is more like at 4%. So that would suggest there's work left to do. Let's say inflation does come down much faster than we expect, which is possible. As I mentioned, obviously our policy is data dependent. We would take that into account. In terms of the core non-housing services, as I mentioned earlier, it's a very diverse sector, 6 or 7 sectors, and so sectors that represent 55 or 60% of that subsectors of that sector we think are sensitive to slack in the economy, sensitive to the labor market in a way. But some of the other sectors are not. And for example, financial services is a big sector that's really not driven by labor markets, wages. So that's why I said there are a number of things that will affect. Take restaurants, right? So clearly labor is important for restaurants, but so are food prices.
He basically said like the money of the poor doesn't really affect the capital markets that much. God damn, Jerome. God damn, son. Man, this guy be dropping these gems, these little bombs and stuff. You would think it's just some passing little statement, but he kind of says like the financial service industry isn't really affected that much by like labor market and stuff like that, just because the people who have money, and the people who already have these well-paying jobs and companies already invest anyway. So the capital class isn't really affected too much by like low-end labor. Yeah, sorry if I'm being a little dorky on this shit. Sorry, bro.
That's really not driven by labor markets, wages. So that's why I said financial services is a big, we think are sensitive to slack in the economy, sensitive to the labor market in a way. But some of the other sectors are not. And for example, financial services is a big sector that's really not driven by labor markets, wages. So that's why I said there are a number of things that will affect. Take restaurants, right? So clearly labor is important for restaurants, but so are food prices. And transportation services is going to be driven by fuel prices, for example. So there are lots of things in that mix that will drive inflation, I would say.
And this is stuff that we teach in the Citadel, right? And this is why I've been saying like we are in the capital class, right? Where you guys, in order to escape the matrix or the red pill, I mean, there's all these fucking people saying escape the matrix, but it all comes from the red pill. Shout out to Roll Tomasi. But in order to escape that, you have to take your fucking labor dollars, transfer them into the capital class, capital markets, grow them in there, and then over time, those grow eventually over the years into something sustainable, where you're like the amount of money that you have because you've grown it in crypto over the years, over one, or this is what we say, over 2 cycles, you can get you can get rich and make money in the first cycle. You get rich and get wealth in the second cycle, and in the third cycle, you get wealthy and like you're just floating. And what I mean by floating is you just have so much money and capital energy, and it's different for everybody depending on lifestyle, but you have so much energy by that third cycle, because energy is currency and currency is energy, right? And you're just floating. You can just do anything. Nothing affects you. It's just like you just float throughout and everything like that. And in order to get that is like you have to take your pleb, your slave dollars, convert them into assets that appreciate over time because they're printing money and they're doing all these things. And then over time, the percentage moves in the market equal more money than you made in the whole fuck. I remember when there was a time and place where I was like, my portfolio went up, like the market went up 10%. And I was like, holy shit, dude. The market's up more money than I made this entire fucking month busting my ass. I remember that point. So I remember where I was at this horrible job site. Terrible job. Fuck, I hated that job so much. I'm not going to say anything. I'm not a dox the whole job. Oh my God, but I was at this horrible place with this horrible fucking guy I was working for on this job. Oh my God, I'm getting irritated thinking about it. I was making okay money at the job, right? I was doing it right, putting bread on the table, right? Putting red meat on the table. But I remember the whole job, I was only going to get paid like maybe like 30 grand for the whole thing, and I had to pay labor out of that. And then the portfolio moved up, and I was like, I'm up more than $45,000 in one day than I am. Though I was like, I just made more money. I just made more money in this one day on the market going up a little bit, on Bitcoin going up, than I did fucking busting my ass, sweating in the fucking heat, dealing with this asshole fucking client all damn day. Right there, I knew I was on the path. I was on the path to freedom. I knew it. I was escaping the slave. The slave sought the Mount Olympus. I saw it. I tasted the ambrosia, man. I felt it. I was like, I saw it right there. I knew this shit. Like, I felt like a dumbass for years, but I was like, I saw it. So be sure to join up to the Citadel, you guys, man. We'll help you level up. We'll help you, and we'll put you around with a group of people that will help you escape this fucking matrix, rise above, ascend the Citadel, and you're gonna do it in the capital class. Because these assets, controlling assets is how you're gonna get rich, and it's how you protect yourself from inflation, and how you actually go in above and beyond inflation. And that's right. Once you wake up, they can't put you back to sleep. That's correct.
Take restaurants, right? So clearly labor is important for restaurants, but so are food prices. And, transportation services is going to be driven by fuel prices, for example. So there are lots of things in that mix that will drive inflation. I would say overall, though, my own view would be that you're not going to have a sustainable return to 2% inflation in that sector without a better balance in the labor market. And I don't know what that will require in terms of increased unemployment, your question. I do think there are a number of dimensions through which the labor market can soften. And so far we've got, as I mentioned, in goods, we have inflation moving down without the softening in the labor market. I think most forecasters would say that unemployment will probably rise a bit from here, but I continue to think that there's a path to getting inflation back down to 2% without a really significant economic decline or a significant increase in unemployment. And that's because the setting we're in is quite different. The inflation that we originally got was very much.
I want to stop the stream for just 1 second, man. I just saw a really wonderful thing right here, man. Wealth Builder. I just broke $20,000 in crypto, man. Congratulations, man. Shout out to you, dude. I mean, I'm gonna get a clap right here, man. Congratulations, Wealth Builder, man. You're on your way, man. I guess he said he invested $4,000 into Illuvium and $4,000 into Hex, and that put him over $20,000. $8,000 invested. You're in $12,000 in profits, dude. Congratulations, man. And it's keep working on it, man. I would get some Ethereum as well, but fucking great on you, man. Congratulations, man. I'm proud of you, man, and I'm proud of any of you guys who are hitting these first financial goals for the first time in your life, man. I was there a long time ago when I resisted the slave mine, when I saw like it's possible. This was a Miguel in very early 2017, 2016 who saw this, and you guys are going to get there, man. And I'm going to be here with you for the whole fucking ride. I promise. There's going to be a lot of ups and there's going to be some big downs. And trust me, I've had a lot of you guys with me here on the downs, and me and Charlie, but I'm here for you guys. And I know it's not easy. Some of you, we spurg out here and there, and we have fun, we laugh, we cry, but I'm going to be on this ride with you guys no matter what. So welcome aboard, dude. Congratulations, man. I'm fucking proud of you, man. That deserves this is a Pepe just for you, man. Congratulations, dude. I'm so ecstatic for you, dude. That's what the Moon Gang is about, man. We're here with the family, man, to keep us safe, man. This is what it's about, you guys. Like, whoa. That's what the Moon Gang is about, man. Like, I'm proud of you, man. I'm proud of you guys, man. This is what we help each other out, man. Like this is what it's all about, man. This is what the Citadel's about. This is what Moon Gang's about. This is what the crypto mindset course are about right here, man. Join up, you guys. I ain't gonna shill it too much, man, but this right here, man, I'm very proud of this product. We almost have 400 members. We're just a couple people shy of 400 people in there, and all these 400 people, they bought the bottom. They got in. We taught them crypto. They're crypto native and stuff like that. Like, what? Oh, sorry. Just to show you guys something, man. Like, I'm very proud of this. I'm very proud of this product that me and Charlie made. It's called the Citadel. It's $100 a month. And it's just a great place to get the right mindset and be around people that aren't going to fucking hold you back, that are with you on this trip and stuff. We're all rowing in the same direction. We're all hunting for alpha and data and stuff like that. And there's people, and there is people out here. These like spurgs and shit, like alpha or this and this. But a lot of the time it's just not getting fudded out, not being bitched out, not feeling down on yourself, having a place where you have like-minded people you can talk to and hang out with, make friendships and stuff. We're gonna do a giant meetup here in Vegas very soon and stuff like that. There's so many people, like we meet Moon Gangers all the time. Me and Charlie get on random planes and like Miguel and Charlie, holy shit. Random, like you won't believe, like the Moon Gang army is insane. We've helped damn near 12,000 people get onboarded into crypto, make them crypto native and stuff like that. And this is a product we created. It's an affordable product in order just to help people. It's a great place where you can ask me questions, ask Charlie questions, and I answer them as truthfully as I can and stuff like that. I'm not going to answer some fucking illegal shit, but it's $100 a month. We're gonna soon upgrade the chats and stuff. We're in the alpha right here. There's no beta, only alphas. And it's incredible, man. And trust me, like a lot of escape the slave mind. You need to be around people that are like-minded. If you want to be a millionaire, get around a bunch of millionaires. And there's a lot of millionaires in that chat, and there's a lot of people on their way to become multimillionaires in that chat. And that's facts. I'm gonna fuck what you heard anywhere, man. We got the longest running cryptocurrency what's called education product in the world. The largest one on that one as well. Most successful one on top of that as well. I'm talking my shit right now because it's true. Ain't nobody onboarded more people than us. Period. So join up, man. Sheesh. But with that, man, let's get back to Jerome Powell, man. You guys kill me with that shit, man. Like, it's like I don't have friends. I got a family. Dominic Toretto. That's correct. And I appreciate you, Wealth Builder, as well, man. You're on your mission, stay on your grind. You will find with crypto. This is the like I work the hardest I ever worked is the minute I found out about crypto because I found out that there was a way. Like once you have a goal and a way, like there's a plan, there's a way to get out of this bullshit. You will Find a way to work more hours, increase your business, get more skills, get around people, and trust me, in a couple of years, you're just gonna be in some place. You won't believe what you'll be able to do. Like, you'll be debt free. You get to go wherever you want to go. But I do warn this sort of thing. You have to keep a little bit of purpose to your life. For some people, you may actually really enjoy what you do, or you get so good at what you do that you actually enjoy it. And you just have to make. There's a lot of grown up decisions and things of talks we'll end up having much later in the bull market, where we'll probably tell some of you guys to just keep your job for a while. Or once another bear market starts up and stuff, you may decide, you know what, I'm okay, I'm good. I really just want to leave this. I'm not happy. Then we make these decisions, and you ask the group and stuff like that. But we were some of the only groups in the world. Everyone was telling you, quit your job, do this, man, fuck that, go travel, go surf, go do. No, we were telling you, no, don't quit your day job. Stay doing this stuff. Like, center yourself. Make the decision when everything's in the shitter, when like right now, when everything's bad, you still want to make the decision. Now's the time to make the decision. Not at the all-time high, because you will this exuberance and this craziness in your portfolio being so much bigger than it is and stuff at the top there makes you make some really dumb decisions. And we help people at the very least maybe get a second opinion on that. That's beautiful. DCC, I'm moving back from Puerto Rico to fam. Dang. I feel you, bro. We'll talk later, man. We'll talk later. Wealth builder, I hope to be the first millionaire in my family so I can help my family out. That is the same reason I did it myself as well. That's exactly the same reason. It wasn't because I wanted a fucking lamp. Like, I'm being honest with you. It wasn't because I wanted a Lambo and I wanted all this stuff. I wanted to have freedom and I wanted to be able to help my family. That's the real reason I wanted to get rich, was to help my family, my friends, and be able to do whatever the hell that I wanted. It wasn't because I wanted to drive Lambo and fuck chicks and do all this dumb shit. It was because I wanted to help my family. Truly. Women was not enough reason for me to get rich. It was because I wanted to help my family. I wanted to help my mom and my dad and my brothers. That's why I wanted to get rich. That's why I wanted to get rich. God damn, I'm fucking tearing up now. God damn it. That's why I wanted to get rich, man. It was to help my family. I wanted to get out of the situation. I was like, I saw the struggle. No Bugatti? Well, it's maybe one. Well, maybe one day. I don't know. It might be a private jet instead or something like that. I mean, we all expand the options, man. But like, stay woke, kings, man. That's what's up, man. But I truly like. If I'm being honest, like the bitches and all this, that wasn't enough motivation for me. It was like seeing my mom and dad working their whole lives, seeing like all my family just working, and they didn't have horrible lives. Some of them did, some of them didn't. But just seeing like we were all just slaves, man. And it doesn't matter if there's black, white. We were like, I just saw slavery around me. It was just this fucking wage cuckness. Even if you owned your own business, you were just like it wasn't enough. So I was like, I was at this point in my life where I couldn't escape it. Like I was just like, I knew the college route wasn't going to work out, but I had this huge guilt because I didn't go to college, and I would pretend to go to a community college because I didn't have the balls to go tell my family that I wanted to escape, and they were afraid that I was going to throw my whole youth away because like I was being stupid. But I didn't let that stop me, and I dove myself into all this stuff. I listened to like the whole not Jerome Powell. I listened to the whole thing with Ben Bernanke when it unfolded. I was listening to Bloomberg Radio. I literally people would catch me, like they would think I'd be listening to music all day. No, I was listening to fucking financial podcasts. I was listening to every fucking piece of knowledge I could get about equities and stocks and bonds. I got books. I still have books on bonds right here and fucking mutual funds and shit, like by my desk and stuff that I've owned since like 2006. Because I knew this money thing was going to be the way out and stuff. I just had to figure it out. And it took me forever. Just forever. And then I had to learn about business. You can ask Waller about this stuff. Like me and Waller, we fucking reminisce all the time talking about this stuff, about like the grind to get where it was, man. It was so hard, man. It was just hitting your head against the wall forever and then not giving up and reading books and stuff. I mean, today I just met Aaron Clary. Like Bachelor Pad Economics was a huge help for me in my life and stuff. It just grinding and learning and looking like a slave on the outside, but a fucking heart of a king, mind of a god. I was trying to ascend. And now that I've ascended and I'm ascending even higher, I'm trying to take everyone with me and trying to clear the path with you guys. And it doesn't feel like what I'm taught. This Fed thing is really that important, but it's the guidance is what everyone is watching. So we have to pay attention to it. And even if it gives us just a 1 or 2% extra edge, that edge could make us so much money or protect us, or at least understand why something's happening, so we can control our emotions, so we can ascend later on. So when we do get our hit, we can fucking take advantage of it. That's what I do this stuff for. All right, I'm a financial dork. I get passionate about this stuff, but I want to save as many people. I want to save as much as you can. That family thing that like wanted to be the first million, that thing really got to me in my heart, man. Because like that's what I did it for. And sure, when we get money, like, oh, we can have fun, we can do all this stuff, go out, bitches clubs or whatever, do whatever the hell you want to do. It's money's an energy, right? It's whatever. It's an amplifier of yourself. But this is the amplifier of myself. Is when I got money, I wanted to help people get money too. I wanted all of us to do better. Like, I don't want to leave this world better than how I fucking found it. So let's get back to it now. Let's grind, man. Let's get this info. Let's get this alpha, man. Let's ascend.
But I continue to think that there's a path to getting inflation back down to 2% without a really significant economic decline or a significant increase in unemployment. And that's because the setting we're in is quite different. The inflation that we originally got was very much a collision between very strong demand and hard supply constraints.
Hey, thank you so much for the kind words, you guys. I really appreciate it. And it's not shout out to deported immigrants and all the first generations and stuff, but even just anyone who wants it and stuff. I've talked to people who are like sons of immigrants or people that've been here for a long time. It doesn't matter. If you want it, you can get it, man. And like, thank you. I appreciate all the kind words, you guys. I really do, man. Like, Gun Monk, you're the man. Miguel, I've been grinding for a hard 8-7 years, straight bashing my head against the wall, trying to crack the code. Super thankful for you. You're going to do it, dude. You're going to do it. But one thing that it took me forever to learn with scaling is, if you really want to do it too, like, just get on social. Like, it's so hard. I know with some of these blue collar works, it doesn't sometimes work out all the way, but like, build some social media presence. This is why I've been saying about like building an Instagram. Like, I fucking ran away from Instagram, and I went because I didn't like it. I felt like it was just so disingenuous, but it's so important, especially if you're trying to scale a business or you're trying to grow yourself and stuff. Like, well, we're going into a future where how many people follow you and how many people know is going to be a big part of your net worth. Because your net worth is your net worth, right? And you join the Citadel, you join the family, the Moon Gangers and stuff like that. You are around people that are heading on the way up. You're people heading up to the Upper East Side, if you know what I mean. But besides that, the more people that even just general, more people that know you, the more opportunities you have. Even I don't know if this is right or wrong, but like, the more followers you have, the more it's easier to get. Like, it's going to be like, where you have a certain amount of followers, it's like it's a bigger yes to your resume, right? But it's also an easy way for you to, sell your products. And what humans do in commerce and stuff is sell products and services to each other. That's the economy. Like we overcomplicate this whole thing, right? I joke around, you know, I'm saying this not even half jokingly. I know everything's a Ponzi, but what we're doing here is just helping each other, like helping us out, right? So just grow yourself, allow, like, but with due respect, like, sometimes I know people like they can't because of their work and stuff, but if you have the ability to put yourself out there, make a YouTube channel, even if it doesn't have to be crypto related, it can be about what you love, make a podcast, be known, make noise. There's so many people that are so quiet out there. Fuck that shit. Fuck being quiet. Be one of the loud ones. Be one of the ones out here shaking and moving and stuff. Even if you're not even the best, because you're out here, the squeaky wheel gets all the grease. Be the fucking squeaky wheel. Talk your shit, do your stuff. There's fucking genius in all of us. You're going to do something fucking magical and fantastical one day. Like I promise. If you do it, you're gonna make it and stuff. Like trust me, I felt like such an idiot for the career path I chose and stuff, but it was the only one that was ahead of me that I could at least I chose the path. Like imagine like a Mexican landscaper named Miguel, like bro, like, but I chose that one because that was the path that I was able to like, where I had control of my, at the very least, I had control of my schedule and my time, and just that freedom there gave me the ability to want to work as hard as I can and push it to the nth degree, and that allowed me to earn the capital to then invest it out and didn't give up on my brain, and then from there I was able to escape, and then I'm trying to help the rest of us escape. You know, man. GC, thank you so much, man. Shout out to another ETH lizard, man. I own some ETH lizards. Red pill lines as well. Can relate to a lot of the things. Lights a fire in me, Miguel, when you go in these rants. One of the best streams you ever had. Thank you so much, man. And it's 2 hours and 22 minutes in, man. The people who really want it can get it. It's in here, man. When this video is over, man, I would love if you guys would just comment in the video and stuff and tell people like, hey, the rant starts here. There's some really good info here. Like leave some timestamps in there and stuff. I have my timestamp again, put some cool stuff in there, but like the comments is really great because like people will like, because a lot of time people look at the video, then go directly to the comments, and then if there's really good comments in there, and trust me, people will really listen to the stuff. I think a lot of the medicine was in the beginning right here, but there's a lot of like the sweetness and the medicine is mixed all in, and I'm hoping like we can really help everyone out, you know. Looks for wealth, man, or looks for danger. I'm sorry. Change the name for looks for wealth. $10 super chat wants me. I want to make real wealth so I can have a harem, so I can give my mother more grandkids, so she can handle. She can experience the joy before she leaves the earth. I love you, mama. Oh man, that's cool. The harem, I love that. Hey, well, hey, you know, we all have our goals, man. I mean, the thing is, I would like that is the one thing that I also push on the channel too, as well. Is like I want like the people watching me right now. There's like 180 you guys. You guys should be the people having the babies. You got like how awesome would it be like if Franklin had like some like Franklin would be a great that Tex-Mex would be King of Jacks, Fallout Zone. You guys would be great people. Like you guys would bring great people onto this earth and stuff like that. You know, like I would rather you like. There's all these liberal. I mean, not just liberal, but like there's good liberals and stuff. But like, there's good in everybody, right? But like I'd much rather have you guys, you know, have the children and stuff because we affect. That's what we raise good people. We affect the world positively. That's how we turn this boat. It is like we're moving at glacier speed, but these small degree changes have radical fucking things in the future over a long period of time. And I'd much rather these people, the crypto people, the crypto mindset people, the hexagons, all the people in crypto space would have children and stuff because we will push our agenda forward. And the future is the children and the people who have the children. If we have the children, then the future is ours. Our genetic is ours. Damn, dude, that was a rant. Damn, man, that's beautiful, man. And Gungluck, man, is like, thank you so much for that advice, bro. That means so much to me. And honestly, that's exactly what I need to hear. You're the best, man. Hey, dude, you are gonna do it, man. I see it in you. It might even be a tough road and stuff like that. But remember, you put a good amount of your money back into your business or whatever you need to keep yourself at. But remember, 20%, 30%, whatever you can manage. Everyone can manage something. Put into the market, grow that capital. Maybe it doesn't turn into a crazy amount. Like we're like, oh, it didn't turn to 100,000. But you'd be surprised. That first like I was talking earlier with Wealth Builder, that first $20,000, $30,000, $40,000 that you end up hitting in this bull market. Well, look, like as an example, Wealth Builder, right? He hit $20,000 just recently. Can you imagine in another year or two what that could be? That might be $100,000, $200,000. You take that out. You put $100,000 back in your business. I mean, pay your taxes, you guys. Long-term capital gains, hopefully, but pay your taxes. Take that money, pay off your debt. Help your mom out a little bit. I know it's not retirement money, but it's the money where like you got a little bit of breathing. You can breathe a little bit, and then from there you can make some decisions. And then you put yourself. And the next you put yourself in this different stratosphere. People won't even recognize you. People won't recognize you in 4 years. Oh, he just got lucky. No, it wasn't luck. It was persistence. It was belief. And yourself in the crypto space and being around other people that want it just as bad. And that's what we put in here. That's what we push in the crypto mindset. That's what we push out here in the crypto space, and at least the right side of the crypto space, the DeFi native side, not this fucking corporate bullshit that they're trying to push down our throats. But yeah, man. Let's get back to it, man. Let's get this alpha, man. Let's see what else we can mine from Jerome Powell. Oh, and they got the date wrong. Oh my god, fucking hilarious. Let's go back a little bit.
Back down to 2% without a really significant economic decline or a significant increase in unemployment. And that's because the setting we're in is quite different. The inflation that we originally got was very much a collision between very strong demand and hard supply constraints, not something that you really have seen in prior business cycles. And so now we see goods inflation coming down for the reasons we thought, and we understand why housing inflation will come down. And I think a story will emerge on the non-housing services sector soon enough. But I think there's ongoing disinflation, and we don't yet see weakening in the labor market. So we'll have to see.
Can we get there with 5%?
Certainly possible. Yeah, absolutely, it's possible. It's a question no one really knows. I think it's because this is not like the other business cycles in so many ways. It may well be that that it will take more slowing than we expect, than I expect, to get inflation down to 2%. But I don't.
Yeah, so that means he's like, well, they don't. This is a very unique sort of situation that we're in because of them, but. So it might take more time of them doing these slow little rate hike increases and stuff like that before it really gets itself fixed and stuff. So interesting, but that the small ones and it knowing will give us a little bit of a run here where we can make some capital. I really believe this for this 2019, 2023 year here, which will lead to I think a decent time in 2024. You got to remember every year, 23 and 24 is going to have a massive 50%, 60% correction in each year. You have to be ready for that. But you buying at these low prices whenever we have the next dip, you purchase, you buy dynamic DCA in, and then you'll be so much like the lows you buy in 23, the lows of 24, you're still in profit.
I don't, that's not my base case. My base case is that the economy can return to 2% inflation without a really significant downturn or a really big increase in unemployment. I think that's a possible outcome. I think many forecasters would say it's not the most likely outcome, but I would say there's a chance of it.
Michael McKee from Bloomberg TV and Radio. I'd like to pick up on what you were just saying about a substantial downturn and ask, with the full weight of your tightening not in place yet, and with the progress against inflation, there's still a lot of talk about very, very slow growth going forward in 2023. And the recession indicators are all suggesting that we are going to see recession this year. So I'm wondering if you've changed your view or you have a more nuanced view of what you think the danger to economic growth is going forward, and whether you're very close to perhaps tipping it into the wrong place, which calls for more restraint on your part.
So I do think most forecasts and my own assessment would be that growth will continue, positive growth will continue, but at a subdued pace, as it did last year. We had growth of GDP growth of 1% last year, and also
He's talking about like we're going to head into a recession and everything's going to crash. And then what Jerome Powell saying here is like, well, you guys like doesn't like we're kind of soft landing it right now, so we're still getting positive GDP growth, even though it's more subdued, so it's much lower, 1%, 2%. But we're not having this giga crash. We're having I think it's supposed to be 2 consecutive negative quarters in a row. It's supposed to be, a recession. I know they've changed it to 3 or some shit because of the White House, but regardless or not, like he's saying, we're still growing. We're just growing at a slower rate. So we're not going into a recession just yet and stuff because we're trying to soft land this thing. Hit the like button, subscribe, hit the notification bell, man. We're also getting this alpha. No one's breaking it down like this so everyone can understand. I'm not going to use these crazy big words and stuff like that and do all this other stuff. Sure, here and there, it's funny and fun to do so, but I'm trying to convey in a way where everyone can understand. And if you can understand, even if you think I'm stupid when I say something, at the very least, you'll understand what I'm saying, and that might be able to somehow, maybe down the road, help you out.
final sales growth, which we think is a better indicator of about 1%. I think most forecasts and certainly my assessment would be that growth will continue at a fairly subdued level this year. There are other factors though that need to be considered. You will have seen that the global picture is improving a bit, and that will matter for us potentially. The labor market remains very, very strong. And that's job creation, that's wages. As inflation does come down, sentiment will improve. You also, state and local governments are really flush these days with money, and many of them are considering tax cuts or even sending checks. So I think that's going to support. They're also spending a lot. There's a lot of spending coming in the construction pipeline, wow, both private and public, and so that's going to support economic activity. So I think there's a good chance that. And
some of the spending he's talking about here is there's some pipeline stuff that maybe go through, but there's a lot of spending in terms of making the electric system a lot more stronger. There, right now we're getting. I mean, even Dodge. Like people didn't believe me when I said this. I said this last year that Dodge was going to go all electric, or a good portion of their business were going to go electric. Like the Dodge Chargers and Durangos and stuff like that, we're going to go electric, and they are. This is the last year they're going to be gasoline, and they're going electric, and you're having a lot more constraints. And as a matter of fact, actually, I think I'm doing a stream this Saturday with Red Pill Thor, and he used to work in actually putting up a lot of the infrastructure for the electrical system here in the United States. It's a very well-paid field. Dangerous, but very well paid. And this is some question I'll tell him and stuff like. But there's a lot of work being done by Americans to make sure the infrastructure is up and running. It isn't the best, obviously, but a lot of spending has to be done, because if we're having this much draining on the electrical system for all these electric cars and stuff like that, there's a lot of capital expenditure that's going to have to be made over these next 10 years in order to hold that over. And on top of that, more of an expansion into I would say battery technology and kind of a more battery storage and stuff all over the United States and stuff like that. We're just seeing this right now. And I'm buying a gas guzzler, woof. But there's that, as well as there's crumbling infrastructure. So there's still roads being built and stuff like that. So like regardless or not, like the kind of the buck's hitting the road here a little bit over the next 20 years, we have to make a lot of investment back into infrastructure. We have to. There's no choice. So this spending is going to happen, but it's kind of a lagged out. So it's seen over the 2 years or 3 years, but it does have effects over time.
That those factors will help support positive growth this year. And that's my base case is that there will be positive growth this year.
Thank you. Rich Miller from Bloomberg. First of all, how are you doing?
Fine, thanks. Fine.
Good, good. Second off, I think earlier on in the press conference, you said you need to see substantially more evidence of inflation coming down. Can you give us some idea of what you're thinking of? You mentioned 3 months, that we've seen 3 months in a row. Governor Walters suggested he might want to see 6 months. Is it just the inflation data, or do you have to see the labor market coming back into better balance to have that substantially more evidence
So
metric?
I don't think there's going to be a light switch flipped or anything like that. I think it's just an accumulation of evidence. So of course we'll be looking, by the time of the March meeting, we'll have 2 more employment reports, 2 more CPI reports, and we'll be looking at those carefully, as all of us will, and we'll be asking ourselves, what are they telling us? And soon after that, we'll have another ECI wage report, which, as you know, is a report that we like because it adjusts for composition and it's very complete. And the one we got, I guess it was yesterday, was constructive. It shows wages coming down, but still at a high level. They're still at a level that's well above where they were before the pandemic. So I don't want to put a number on it in terms of months, but as the accumulated evidence comes in, it's going to be reflected in our assessment of the outlook, and that will be reflected in our policy over time. But I will say, though, it is our job to restore price stability and achieve 2% inflation for the benefit of the American public. Market participants have a very different job. And it's a fine job. It's a great job. In fact, I did that job for years, but in one form or another. But we have to deliver that, and so we are strongly resolved that we will complete this task because we think it has benefits that will support economic activity.
The capital class and
many
cause
years.
unemployment. Yep.
Thank you, Michelle. Thank you, Fed Chairman, for taking the questions. So you've talked about we had solid job growth. I'm Edward Lawrence from Fox Business, by the way. We had solid job growth, a slight falling in the increase in consumer spending. It seems so far it's been relatively mild from the economy to go from a 9.1% CPI inflation to 6.5% CPI inflation. Is the hard part yet to come to go from 6.5 to 2?
I don't think we know, honestly.
That was a great question right there. Wow. Yeah, it's like going from 9, the all-time high of 9 down to like 6, and going from 6 to 3. Because like once we get to that 3 to 2 range, I think they really start relaxing at that point, right? So like this is like the hard part of this next lowering, because that really starts controlling things. Now it is skewed. It's like whatever number they say, right? If they say it's 6%, double it. Just double it. And thank you so much, man. I appreciate that. But get double it at the very least. That's kind of always been my rule of thumb. So if they say, if the CPI is an example, they're saying it's now like 6.9 or whatever. I always round up a tiny bit, but let's just say it's 6% for the CPI, then it's at 12 minimum. So their target rate of actually getting to 2%, we're probably closer to 5, just 6% inflation. But that's the levels they want to hit, and then everyone kind of agrees, like, okay, and then they kind of forget, and then the sheeple is like, oh, we're at 2% CPI, and the inflation's not that bad, and they kind of forget about it because they don't feel it as much. It's a boiling frog sort of a thing. They want to boil you slowly, but if it gets too hot too fast, you'll notice you'll jump out the pot, and they don't control you anymore, and then things get out of control because they can't slowly extract wealth and money from you because you're their tax cattle sheep.
Job growth. I'm Edward Lawrence from Fox Business, by the way. We had solid job growth, a slight falling in the increase in consumer spending. It seems so far it's been relatively mild from the economy to go from a 9.1% CPI inflation to 6.5% CPI inflation. Is the hard part yet to come to go from 6.5 to 2?
I don't think we know, honestly. So we, of course, expected goods inflation to start coming down by the end of 2021, and it didn't come down all through 22, and now it's coming down, and it's coming down pretty fast. So I would say this is not a standard business cycle where you can look at the last 10 times there was a global pandemic and we shut the economy down. and Congress did what it did, and we did what we did. It's unique. So I think certainty is just not appropriate here. Inflation, it's just harder to forecast inflation. It may come down faster. It may take longer to come down. And, our job is to deliver inflation back to target, and we will do that. But I think we're going to be cautious about declaring victory and, sending signals that we think that the game is won, because we've got a long way to go. It's the early stages of disinflation, and it's most welcome to be able to say that we are now in disinflation. But that's great. But we just see that it has to spread through the economy, and that it's going to take some time. That's all.
How long do you see then the federal funds rate remaining at this elevated level?
So my forecast and that of my colleagues, as you will see from the SEP, and I mean, there are many different forecasts, but generally it's a forecast of slower growth, some softening in labor market conditions, and inflation moving down steadily, but not quickly. And in that case, if the economy performs broadly in line with those expectations, it will not be appropriate to cut rates this year, to loosen policy this year.
Sheesh.
Of course, other people have forecasts with inflation coming down much faster. That's a different thing. If that happens, if inflation comes down much faster, then we'll be seeing that, and it will be incorporated into our thinking about policy.
So he's saying basically we're pretty much pausing at most. That's a key thing right there. We're pausing at most and not really going to lower rates at all. But if the CPI shoots up a lot or starts shooting up a lot, or we start noticing things we don't like, then we'll hit the ban hammer and hit rates higher. So they're basically saying when we pause, we're not going to lower them, but we could still raise them. But when we do pause, that means we're not going to lower them and stuff. So the lowering won't really happen until, if they do end up ever doing it, is B24 and stuff like that. But that's after they feel like they're confident in that. So it could be, who knows? There could be some political stuff in there. Maybe typically, so this is how it works. Knock on my desk here. This is typically how it works: is that the Federal Reserve will help whatever administration is in office. They're kind of what's a good word? Not ambidextrous and stuff like that. I mean, it kind of helps with the right and the left there, but they're basically neutral. They'll just help out whoever is in power at the time. And if the Republicans are in power, they help the Republicans. If the Democrats are in power, they help the Democrats. That's usually that's how they go, basically. So what's happening here is basically that I wouldn't be surprised if they did lower rates. They'd probably lower rates closer to the election in order to help the Democrats out and kind of stabilize markets if some shit's going down and stuff. So interesting.
Thank you, Chair Powell. Simon Rabinovich with The Economist. May I ask a further question about the language around ongoing increases? That, of course, implies at least 2 further rate rises. If you look at Fed Fund futures pricing, the implication is that you'll raise rates one more time and then pause. Are you concerned about that divergence? Or do you think if everything breaks right, is that a plausible outcome?
I'm not particularly concerned about the divergence, no, because it is largely due to the market.
He said, "I don't give a single fuck, bro. I don't care what I said in the past. If we extend out, if I'm gonna do another raise, I'll do another raise, son. Damn, son, you just hear that shit? He's like, I know you guys said you guys had one more raise in March and stuff, but like, are you afraid of how it makes you look?" He's like, "No." Oh, man.
Increases. That, of course, implies at least 2 further rate rises. If you look at Fed Fund futures pricing, the implication is that you'll raise rates one more time and then pause. Are you concerned about that divergence? Or do you think if everything breaks right, is that a plausible outcome?
I'm not particularly concerned about the divergence, no, because it is largely due to the market's expectation that inflation will move down more quickly. I think that's the bigger part of that. So again, as I just mentioned, our forecasts, different participants have different forecasts, but generally those forecasts are for continued subdued growth, some softening in the labor market, but not a recession. And we have inflation moving down, into somewhere in the mid 3s or maybe lower than that this year. We'll update that in March, but that's what we thought in December. Markets are past that. They show inflation coming down in some cases much quicker than that. So we'll just have to see. And we have a different view, It's a different forecast, really. Given our outlook, I don't see us cutting rates this year if our outlook turns true. As I mentioned just now, if we do see inflation coming down much more quickly, that'll play into our policy setting, of course.
Hi, Chair Powell. Scott Horsley from NPR. One of the changes in the statement this month is that the committee is no longer listing public health as among the data points you'll consider in assessing conditions. What should we make of that? Does the Federal Reserve no longer see the pandemic as weighing on the economy?
Ooh.
That's the general sense of it. Look, we understand. I personally understand well that COVID is still out there.
Look at him doing the corporate answer. Look at him doing the corporate answer. Damn, Jerome.
Pandemic as weighing on the economy.
That's the general sense of it. Look, we understand. I personally understand well that COVID is still out there, but that it's no longer playing an important role in our economy. And we kept that statement in there for quite a while, and I think we knew we would take it out at some point. There's never a perfect time, but we thought that people are handling it better, and the economy and the society are handling it better now. It doesn't really need to be in the Fed's monthly or post-meeting statement as an ongoing economic risk, as opposed to a health issue.
Nancy. Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace. Wanted to go back to another thing that Fed Vice Chair Lael Brainard said recently. She said she doesn't see signs of a wage price spiral. And I'm wondering if you agree with that.
I do. Yeah, I do. I don't see that yet. But the whole point is, once you see it, you have a serious problem. That means that effectively, in people's decision making, inflation has become a really salient issue. And once that happens, that's what we can't allow to happen. And so that's why we worry that the longer we're at this, and the longer people are talking about inflation all day long, every day, the more risk of something like that. But no, there's not much.
So you see, it's what they're talking about here is like, even though there's a real part of it, what they're really worried about is the psychology. The normies start like, yeah, inflation's bad. This inflation stuff's horrible. Oh my God. Then they start doing reckless shit with the money and stuff like that. That's not in the benefit of them. And then this causes the currency to collapse and doing all kinds of fuck shit. So this is what they're worried about with inflation entrenching itself. They're afraid of the psychological of the normies waking up. But he literally just said it right there. He said the longer it's talked about in the media, the more like it gets in their brain and stuff like that. It's consumer psychology. That's correct. Consumer psychology. Like, just re-listen to that shit. This is kind of a dark sort of thing, but this is what I'm trying to. Like, people joke. Like, people think I'm fucking kidding around with all the psychology shit that I'm kind of talking about and stuff like that. But like, this is all a part of like FA and fundamental analysis and stuff. There's a lot of like looking at it of the psychology of the person that's buying and purchasing these coins is the humans, right? So learning about how tribalistic people are and learning about these sort of things are really important.
Marketplace. Wanted to go back to another thing that Fed Vice Chair Lael Brainard said recently. She said she doesn't see signs of a wage price spiral. And I'm wondering if you agree with that.
I do. Yeah, I do. I don't see that yet. But the whole point is, once you see it, you have a serious.
And what they're talking about, that wage price spiral, is basically that people freak out like, oh fuck, these dollars are worthless. Holy shit, holy shit, holy shit, holy shit, holy shit, holy shit. And they toss out these dollars to get like real assets and stuff. And this is like, they'll just sell other, like, basically what'll happen is nobody wants to hold dollars anymore. And they'll just spend it all on like food, consumables, cars, more to a crazy level, and assets and everything like that. And then basically, because no one wants to hold these dollars, and then some of the big people aren't trying to hold their savings in dollars because like this shit's getting worthless. You have this whole thing where the prices start going faster than people's wages can keep up, way more, where like it's this horrible spiral where basically it's like it takes you basically to insta death of $1, Hot potato, yeah. This is why, like, we're like rug the dollar. You know, we kind of half jokingly rug the dollar, get into crypto. But look at this. This is what we're saying is like, yeah, get your fucking dollars, buy these crypto assets and stuff like that, and whatever, and then buy assets. Before if this really happened and stuff like that, the people who hold the assets and stuff are going to be the ones that have wealth and power and money.
Serious problem. That means that effectively in people's decision making, inflation has become a really salient issue, and once that happens, that's what we can't allow to happen. And so that's why we worry that the longer we're at this, and the longer people are talking about inflation all day long, every day, the more risk of something like that. But no, there's not much. It's more of a risk. It always has been more of a risk than anything else. By the way, I think it's becoming less salient. And people are, we pick that up in conversations, and I've seen some data too that show people are, gradually, they're glad that inflation's coming down. People really don't like inflation. And as we see it coming down, that could also add a boost to economic activity. You look at the sentiment surveys now, and they're very, very low, with 3.5% unemployment and, high wage increases nominally by historical standards. Why can that be? It has to be inflation, right? So I think once inflation is seen to be coming down in coming months, even, you will also see a boost to sentiment, I hope.
So that's what you're looking at most closely is consumer expectations.
That's at the very heart, is consumers and businesses. Essentially, we believe that expectations of future inflation are a very important part of the process of creating inflation. That's a sort of a bedrock belief. In one way or another, it has to be. We think it's important. And in this case, I would say the risk 8 months ago or so, longer-term inflation expectations had moved up. We moved quite vigorously last year. Expectations seem to be well anchored, including at the shorter end now, not just the longer end. So it's, and I think that's very reassuring. I think, the markets have decided and the public has decided that inflation is going to come back down to 2%, and it's just a matter of us following through. That's immeasurably helpful to the process of getting inflation down. The fact that people now do generally believe that it will come down, that'll be part of the process of getting it down, and it's a very positive thing.
So that's where I'll end it right there. I think he talked a lot about the psychology. I wanted to end it right there on the psychology of it, that they're real, like one of the, he almost let it slip on the back. They're really watching is like how bullish or bearish people are. And right now, like he's basically saying like the economy still is growing. Wages are historically on average growing comparatively to the like old times and stuff like that. So that's good. But people are feeling really skittish and stuff because their dollars are buying them less products and stuff because of the inflation and stuff, or maybe they're just not feeling too happy and stuff like that. So there's a lot about psychology there, man. So definitely, man. America, baby. I hope you guys have been able to learn a lot from this. You guys, I'll be coming back to you guys possibly this even Friday. We'll see. Like I got some crazy. I've got a stream I've got a really cool stream with Red Pill Thor this Saturday at 1 p.m. as well as I have a cool stream at 8 p.m. EST, PST, or actually, no, if I'm sorry, I've got a stream Monday at 5:30 Pacific Standard Time. It's going to be a big Red Pill crypto finance sort of talk and stuff. I'm going to have Big Mo, Christine, Cappy, Rolo. I'm gonna have a lot of big hitters on the stream on Monday. Then on Tuesday, I got another hitter for you, but I'm gonna keep that in the pot. Bro, we have some hitters this week, you guys. We got a lot of cool streams coming up, man. There might even be a stream tomorrow, possibly, and stuff like that. I'll keep you guys posted. Follow my Twitter, follow my Instagram. I always post everything right before that, and I try to give you guys kind of a heads up of when I'm doing streams. And be sure to join the Citadel, you guys. It is a wonderful thing and stuff in order to kind of escape the matrix and stuff. But with that, man, thank you so much, man. I appreciate it. Have you guys a great night, and I'll catch you guys in a little bit. Peace.